All right. Good morning. Good morning, Cap. Nice to see you. How's everyone doing this morning? Got all the late bloomers this morning coming in. Andy, nice to see you. Josh, good. Nice to see you. Happy Friday, guys. Man, news was crazy this morning, wasn't it? That's about the longest I've seen the market just spike, jump, and bump after a news release in quite a while. I think everybody's done with the holidays, right? When the tooth doc gets you, man, tooth pain is no fun, Andy. I hope that you get to the other side of that really quick. Um, what happens when you play with fire? Did you try to trade the news? Did you try to trade? Oh my gosh. High ticked and then it continues. Who would have thought that a short into all that support wouldn't work out, right? Who would have thought that a short into support without momentum wouldn't work? Playing with fire. One here, bigger bounce. Triggs down, not below fibs. Price full bar from Triggs. Maybe not. Oh, there is here. There's your slingshot there, right? There's your snapback. John says your fibs are wrong. Any ideas? Gary, if your fibs are wrong, um, are you on 7 or 8? I don't know. So the first place I always go, and of course I'm not the tech guy. One of the coolest things that you can do, one of the easiest potential fixes, Gary, is let me go to. I'll try and play tech guy this morning real quick. Let me go to the resource page. Come on now, into the software user guide, and let's do bum bum bum. Do the reset and repair on your data. You're going to have to disconnect, reset, repair. You may have to reopen. But if anything, that's going to get you, at least with the data coming through a little cleaner with a full reset. Um, that's my first place to go when my fibs don't feel right or something seems off, is I make sure that I get my data. And then I'm looking at different thing. The days back, I'm making sure that I have that in there, making sure that I have the correct template on there. But that would be my start is go to tools, database management, and just reset and repair it and see if that gives you some help. And if it doesn't get you where you're supposed to be, and guys, this is for everybody, not just Gary. I have the most brilliant guy in the world over here in tech support. And while I will do everything in my power to help you guys out if I've seen the problem before, there's nobody better at it than Jason. Um, so I would be very interested for you to go and talk to him if that doesn't work, Gary. I hope it works out for you. E. Webster, you said you didn't learn the first time one-to-one suck. Where were you going? E. Webster, it has nothing to do with one-to-ones, brother. You're ignoring your large chart. 100%. Can I say that with all the love in the world? Nothing about this large chart says go up. Not a thing says go up. That is your opinion getting its ass kicked. They have cameras. They know. Like, respectfully, E. Webster, you had an awesome day yesterday, and now you're coming in guns blazing. Take a deep breath, take 2 steps back, and review your rules. It'll pay dividends. Trust me on this one. Been there, done that. At the time of the trade, the triggers were up and green. Um, E. Webster, please know that this comes from a place of love and concern for your well-being. But respectfully, I'm calling bullshit all day long. There is absolutely no way those triggers were up in green when that trade happened. Those triggers hadn't been up in green since 8:08 a.m. Does that make sense? Do you see it? Your small triggers were up in green, but your large triggers were down. And they were below the area that you traded from. So every trigger line that you had on your large chart was angled down and below this fib, right? Your smalls were below the large, which meant you had no momentum. This is a textbook termination condition, and you had three divergences from the top side. But you also had a pivot stop out from the downside, which means, man, you're just in a fight. You're just in a fight, and that's okay. I've been in that fight, and I have lost that fight. Gary, I don't have eight open. And I apologize for that, but it'll literally walk you through everything right here. All you have to do is go to Tools, go to Database Manager, and then follow the buttons to reset and repair. That's it. Let me put that picture in there. And I'll tell you what, man. My day two is always the toughest day after a great day. Because what happens is you get a little bit excited. You're like, well, shoot, I'm really good at this. And I'm going to win no matter what, because that's what I did yesterday. And you forget to read your large chart and you form small chart opinions. Um, and even if you were looking for some sort of HVA trade or continuation off of a good bottom, you're directly in determination conditions. And that is one of the hardest things to do, is to not only fight direction and momentum, but also fight those areas. So we'll talk about it more today, and we'll look at it. And guys, this is what we do. When you take trades, it's okay to make mistakes. It's okay to break rules. It's okay to form opinions, but you have to do what he just did. Drop it in the room. Let's talk about it. Let's see what we see. Because when the adrenaline stops, when you kind of settle in a little bit and you go back and look at it, you're like, oh, okay, I see what I did there. I know because I did it yesterday, guys. I had to take a trade three times because I got so freaking antsy. I lost twice, and then I just took the right trade, and it got me back to break even on that whole scenario. It happens sometimes. You get excited, um, but that's okay. It's okay. It's all right to make mistakes. It's okay to mess it up, but sometimes you got to go, all right, let me step back. Let me take a deep breath. We're talking about news this morning, guys. This is calendar from the Forex Factory. This lets me know when news releases are coming out. This lets me know when the market may be going crazy. If you watched the NASDAQ this morning, man, you saw it. And it was odd because 2 or 3 minutes in, usually it settles back down. There was no settling. It was too fast for me to trade. I hadn't posted that in the room. And guys, for a market to be too fast for me to be able to make good decisions on, that's a fast market because I'm so in tune with what I'm looking for that that it's almost like the market moves in slow motion. But this thing was cranking, and I knew that it was going to do that. I knew that it had the potential because I had three giant high impact news releases at 8:30 this morning. So I walked back in and I watched it happen, but I didn't trade. I didn't get in front of it. I didn't try to beat the market. I'm not making decisions based on these, but there are people that are, and that's what you see. And I want you guys to take a look real quick. Let's go to the NASDAQ real quick at the time of that news release. The news was at 8:30. So let me get my first 8:30 on there. Holy smokes, there we go. There's 8:30. There's 8:31. That's an awful lot of movement in a very short period of time. That's from 25 to 50. That's like an 80-point move in the NASDAQ in a matter of seconds. And you'll see it, it's so fast that it'll literally put 8309 to 8316. This entire move down happened in 7 seconds. You trade that mess, there's a good chance. The challenge is every now and then you get lucky. Every now and then you get lucky and it goes your way and you're like, I'm the smartest trader ever. And then you try to trade news again and you get slipped out 1,000 points, which is never any fun. Um, I actually took one trade as it started to slow down, and I couldn't move my stop fast enough. I hit my first target, and it happened so fast, they decided to crank the speed back up that it hit my full stop loss. And I was like, son of a gun. I couldn't move fast enough. I couldn't react fast enough to manage the trade. So I'm always looking for high impact. We've got ISM services at 10 a.m., medium impact at 1:30, FOMC bargain speaks. Guys, I'm aware of this news because I don't want to trade into it. I don't want to be a part of that mess. Um, so I check that every day. That's part of my routine. I open up the tutorial section. I go to the resource page or the education page, guys, and I know that I've got all my NinjaTrader how-to, what I was sharing with Jerry this morning, or Gary, excuse me, Gary, building new charts and muting the room and screen capture, such an important part of what we do. Do I have some new folks in here today? I heard that I might have a couple in the room. If you're brand new, raise your hand, let me know. And if you need any help today, don't be shy. Guys, this goes for all of you. Use your voice a lot today. Talk a lot. Post a lot of pictures. Get information that you wish you had, but you were always too scared to ask. But all of this NinjaTrader how-to happens right here, guys. Scroll through it this weekend. Take a look. Make sure you're comfortable. Scrolling charts, setting up stops and targets, all that good stuff. And then if you find yourself with any challenges, bring them to me. Let's fix them together. And then the tutorial section, guys. This is where everything comes from. All the rules, the best of the best looks, all the exciting stuff that makes you and helps you be successful as a trader. You're going to find it all right here on the tutorial section. Um, I say this a lot, and I'm going to say it again. I don't keep any secrets from you guys. I will give you everything that you need to be successful. You have access to the best software in the world. You have access to some pretty darn good education. The only thing that I won't be able to provide you is experiences, repetition. So what I'm going to do is I'm going to provide you something solid to look for in the beginning as you build that experience. And we're going to do that with what we call a high probability trend trade. Because a high probability trade, and this is straight from the glossary of definitions, guys. A high probability trade is defined as when each indicator on every chart agrees for the trade. You're going to have the strongest triggers, which means that you have the best momentum in the world for taking a trade. You are going to have a clear path, nothing between you and your targets, which means that these key areas where people are making decisions, where the market tends to bounce, you won't be trading into them because you know better. And you're going to understand these concepts and you're going to be able to use these rules where everything is in your favor. And you're going to do it because it's going to teach you to be a chart reader. And that should be your goal. If you're brand new with me, be a chart reader. Being a day trader is a byproduct of being able to read the information that your charts are giving you. And 90% of your day, some people would say 95% of your day, is spent really just looking at your indicators and waiting for advantages to come into place so that you can enter the market, so that you can manage these trades and take these great high probability trend trades. Your ability to read your charts is going to give you a couple key skills, guys. You're going to understand where the market is likely to continue. And these continuation points, these are where you're getting into the market. These are where you're taking those advantages, you're capitalizing, you're getting in, and hopefully you're making profits. You're going to understand these likely to continue spots. You're also going to understand where the market is likely to go. And where the market is likely to go gives you the opportunity to take profits at a very appropriate spot, to use these key areas, to use losses of momentum, and get out of the market where it's likely to, where that market was likely to go, or to set your targets where it's likely to go because of the momentum, because of these key areas. Likely to go is going to help you a lot with your management as you learn to trade. And then finally, and most importantly, you're going to understand where the market is likely to stop. And you're going to be able to gauge this with a very simple recipe, but where the market is likely to stop, we call these termination conditions. Um, a termination condition is nothing more than a line on your chart where decisions are being made. The termination conditions are where buyers enter the market, sellers enter the market, where both of these entities take their profits. And these termination conditions are where fights can happen. You're going to be able to recognize them in an instant. And what it's going to do is it's really going to help to keep you safe. It's going to keep you out of some trouble that the average user may find themselves into. The average trader that doesn't have the advantage of Nexgen. This high probability trend trade, this one that teaches you to read your charts, it happens on it's three rules. Sorry, allergies had me sucking wind this morning. Um, three rules, guys. That's it. Keep it simple. Your three rules, each one provides an advantage, and the advantage is put together: momentum, a clear path, and an entry area. That's the recipe for a trade, especially for my new users. This is the recipe for entering a trade, for entering a high probability trade, a trade where all the indicators agree. There's only three rules, and these three rules, let me give you a copy of these, guys. Save some pictures when I drop them in the room. Whoops, that was the wrong one. Three rules on only two charts. Simplicity. Gosh, Mark keeps saying keep it simple, but this is day trading. It's got to be difficult. It doesn't. It doesn't have to be difficult. It doesn't have to be confusing. Three simple rules happening on only two charts, guys. Two charts worth of information. Everything begins on the large chart. Everything starts on the large chart. The large chart leads the way. However you want to say it, to make sure that you understand that everything has to happen on the big chart first, because the big chart is the large crowd. These are the people that have way more money than you. These are the people that create trends. These are the people that establish momentum. And these are the same people that are reacting to those key areas, guys. The large chart leads the way. It's the large crowd. It's a very slow chart. It's a broad stroke of a brush. And you'll get everything you need off of the most current bar on the large chart. Your large chart defines direction. Which way is the market moving? Therefore, which way should I be looking for trades? The large chart defines momentum. Do I have the advantage of momentum? Through rule number one, is this a market that is likely to continue in the direction of the trend? And then finally, the large chart's going to define areas. Have I reached one of those likely to stop areas? Am I at a termination condition? And this is where the first two rules happen, guys. Large chart rules one and two are met on the large chart, and you will have the advantage of momentum as well as the advantage of a clear path, nothing between you and your target if you're following the rules for those high probability trend trades. And then once you get that information from the large chart, once the large chart says it's time to look for an entry, we're going to rely on this small crowd, these people that love to fight trend and momentum, these guys, they're yahoos, if you will, and they're going to fight everything going on. But the cool thing is they're going to give that market a little bit of shove. These guys are like the medium-sized bullies on the playground, and they're going to be able to give that market just a little push back, and that's where you guys are going to capitalize at that likely to continue spot. So the small crowd, the small chart, is a refinement chart. What happens in that one bar on the large chart can be broken down into probably 15 to 30 bars on a smaller, faster chart. And what it does is it refines the broad stroke of a brush. It pinpoints where the market is likely to continue. And rule number three of three, is your rule for entry. And it's going to get you into the market where the market is most likely to continue. Um, Guys, this is the easiest way to learn to read your indicators. This is a methodology using these two charts, using these three rules. When you learn to follow the rules for this trade, this is a trade that typically wins 70 to 80% of the time. This is your springboard. This is your jumping off point. Once you learn to read your indicators, guys, it's going to open 1,000 doors for you. It's going to get you to the point to where you're like, oh my gosh, there are so many opportunities in the market, and I know this because I am a master at recognizing advantages, and I'm willing to take trades when there's more advantages than disadvantages. So we're going to focus on chart reading initially, guys. And I posted in the room earlier, I posted a picture of an annotated chart and how to annotate your chart. And I said that the people that post the most, that ask for the most help, these are the people that get to where they want to be the quickest. And that really is the step-by-step path to becoming a confident trader ASAP. Post your trades in the class, but not just your trades, right? Maybe you're just doing some chart reading. Maybe you're curious about termination conditions. Maybe you're curious about entries. Take a picture, drop it in the room. And what this does is this opens up the door for a one-on-one conversation. You and I are just going back and forth, and we're talking about what you see and how I can help you see it better. And that's the first thing, guys. Don't be shy. Change your username if you don't want anyone to know who you are. But show me everything. And then use your spreadsheet. Nexgen provided you a spreadsheet. It's in the study picks folder. I'm going to give you a copy of mine anyway. Here, let me drop it in the room right now. Hey, good morning, Cindy. But the spreadsheet, guys, has three parts to it. I'm going to show you the three parts on mine. The first one is going to be your trade journal. The first one is where you can, every trade you take, you're going to drop it in here. You're going to talk about how you felt, what the conditions were, whether you won or lost, but it gives you this spot for feedback. When I posted the chart in the room, what did Mark say? Hey, good morning, Dwight. And what you're going to be able to do is you're going to use this. Absolutely. So AE, when we get to rule number 3, I'm going to go through momentum and clear path, and then we will go full blown on the window of opportunity. Fair enough? That way I don't jump in front of the first two rules. So it'll be in about 25 minutes if you have time to be here for it. Guys, every morning, go back and look at what you did yesterday. And ask yourself what worked, what didn't work, what felt easy, what felt forced. This little brief study each morning, guys, pour a cup of coffee, charts are loading. It's going to prepare you for the day. It's going to accelerate the learning. And what you're going to begin to recognize is you're going to recognize situations that seem to be bringing you a lot of success, patterns that are bringing you success. But more importantly, and I think that this is the key to what we do, is by posting in the room and by going back and looking at your charts, you're going to see where your challenges may be. You're going to see patterns in yourself that may be hindering your forward progress. And that's one of the things that I get really good at is seeing your chart, seeing your plan, and helping you recognize when you're breaking your rules or maybe you're giving up advantages. And what happens is it keeps you focused. You go into the day, you're like, man, yesterday I traded into those termination conditions. Today I'm really going to try not to do it. Today I'm really going to make sure that I'm solid, that I'm not going through it. And this will accelerate the learning. And then, guys, we're going to learn the trigger lines and the Fibonacci rules for when it's okay to trade. We're really just going to focus on those three rules. We're going to let it happen on two charts. And we're going to keep it simple. And we're going to focus on what the advantages look like and what the advantages don't look like. And we're going to piece them together to create a trade. Hey, AE, I know that you're pretty good with most of the rules. There's a few pictures for the window of opportunity if you want something to look at until we get to it for in the actual classroom. I know everybody's at a different level, so I try not to keep you guys bored. My first hour is dedicated to rules, guys. 3 rules on 2 charts. First hour is dedicated to getting you guys comfortable with the looks. I want y'all simulating. I want you pulling the trigger, getting out there, break some eggs, make an omelet, right? The more mistakes you make when you're on simulator, when you're a new user, when you're utilizing that feedback, guys, the easier it becomes later to recognize and avoid those mistakes. The idea is that you're going to post pictures and make sure that you have the correct rules. Make sure that you're not sacrificing advantages. Because the idea is if you're winning on simulator, but you're winning through luck, you're winning through just jump in, jump out, I have absolutely no idea why, well, then it's not really repeatable. It's not something that you can go to, but it creates this false sense of security and this false confidence. I want you guys to be statistically advantage laden every time you get in the trade. So following the rules is going to help you a lot with that. We will simplify high probability trend trade. Every indicator on every chart agrees for the trade. We're also going to talk about a medium probability trade. And anytime you hear me say medium probability, it means that one of your advantages is gone, which means that it's no longer high probability, which means that it's not 70 to 80% potential winner. And what I find is that very often with one of these missing under the right conditions, you can still take a successful trade. And these medium probability trades simply mean that most of your indicators line up. However, a small issue exists. The most common one will be the issue of a clear path. And I'm going to give you a very solid plan to optimize your chances of success. And we'll talk about that a little bit today. But you need to know what looks you're going to commit to. You need to burn these looks into your mind, guys. And that's where the spreadsheet comes in again. The second page is every time your rules are met, every time the advantages are present, every time you're like, yes, this is the one I want to take for the rest of my life because it wins more than it loses, take a picture, annotate why, and drop it into your personal trade setups. What you're doing is you're formulating your trading plan. You're giving yourself a concrete look that you are going to commit to 100% because of the advantages it brings. And then on the third page, this is all the client trades. There's about 275 pictures of client trades that I collected from class. There is a full blown, and once again, AE, there's the entry sequence right here talking through it. That'll help you with the window of opportunity too. There's things if you're a NASDAQ trader that'll help you in the NASDAQ. Management ideas, because we focus on entries for the first hour, but once you have an entry, you've got to manage it. So there's a lot of ideas on management, patterns that repeat themselves in the market, and then it's the Mark Novak section, the oh my gosh, I just traded into a termination condition section. And this is going to help you identify an awful lot of termination conditions. And once you can identify them, it's easier not to trade into them. Your goal as the new user is to make your section of the worksheet look like my section, to fill it up with your pictures. Commit to at least 15 annotated pictures today, guys. By the end of the month, you're sitting around 300 pictures, and 3 months in, guys, you're going to be at 1,000 pictures. And I'm telling you right now, at 1,000 pictures, it's unbelievable how much the market slows down. It's unbelievable how easy it can be. And I am just under 8 grand on mine, and that's just for a year. That was just 2023. 8,000 pictures in a year, guys, is an awful lot of information. It really does create a lot of recognition. So really commit to those pictures. Don't underestimate the advantages that that brings. Because you have to learn the looks so that they're easy. And the more pictures you take, the easier those looks become. So without further ado, guys, and I see that there's people posting in the room. Just if I have new people in here, I want to remind you, my first hour, we're going to talk about these 3 rules. We're going to look at pictures. We're probably going to go back, find some real world examples. My second hour is where, no, you can post, Josh, is where we're going to look at your charts. I'm going to look at what you've done, what you've annotated, what you're talking about. And I always invite you guys, if you have to leave early, hey, good morning, Adriana. I have been waiting for you to say hello in this class. Nice to see you. Oh, no worries. Pump those numbers up. Absolutely. Share that gift, Josh. I love it. We're going to focus on these rules, guys. That's the first hour. And then the second hour, you're going to get feedback on everything. I'm going to look at your charts. We're going to look at the live market. We're going to talk about the advantages. And guys, the second hour, the third hour, that's where you guys run the class. That's where you guys tell me what we're going to talk about. Got to pump those numbers up. Rookie numbers. I love it. Taking pictures, guys. Got to take those pictures. Um, Get in, make it your class, guys. Be stingy with the time that's available. Don't worry about the people around you. I mean, it's a very respectful class, but every time you ask a question, 10 other people learn something great. So you might be doing the world a favor. You could be saving the world with your question, guys. Don't keep them bottled up. But let's talk about rules. Let's talk about advantages. Let's make sure that you guys are comfortable with what we're looking at. And rule number 1 says that we have to have strong triggers, guys. Strong triggers are a must. I can't stress this enough. Strong triggers are the fixer of bad things, I think, when you're trading the market. Um, but in order to have strong triggers, you have to be trading with the direction of the market. That large chart defines the direction, and it does it very simply. If the background on your large chart is green, you are in an uptrend, and you should only be looking for rules to be met for high probability trend trades long. And what's cool is that it doesn't mean that you just go long, you just buy the market instantly. It means that you're looking for your rules to be met. You're looking to make sure that everything, those advantages are in place, but you're only going to do it to the upside. You're not going to try to go short with a green background. And the other side of that is if the background is red, you're in a downtrend. And the only way that you can have strong triggers in a downtrend is if all the colors match. You're only looking for the rules to be met going that direction. Guys, this is one of the biggest safeguards for new users. This will eliminate an awful lot of mistakes just trading with that large chart direction. And then once you've defined it, the only way to have strong triggers is if all the colors match. Your small triggers are those solid lines. Your large triggers are those dashed lines. Smalls are fast, large are slow. Doesn't matter how they came to be. You don't have to build a watch to be able to tell time. What you do need to know is that when the small triggers break above and away from the large triggers, when everything is wide and angled in the direction of the trend. Guys, this is your strong trigger look. It's like scissors. When they open, you're capable of cutting, right? That's when the work gets done. When you have this separation between the two, this is a strong trigger look. The odds are favorable for the market to continue up. In a downtrend, when the smalls are below the large, everything is wide, everything is the same color. The space between the two lets me know that the odds are favorable for the market to continue down. Odds favorable momentum is the battle cry in this room, guys. Odds favorable momentum is your first advantage. Odds favorable momentum will break key Fibonacci areas. Odds favorable momentum will push that market in the direction of the trend. Odds favorable momentum will even cover some of the common mistakes that new users make if you commit to that rule number one, if you really make sure that that one never goes away. Because strong triggers save lives, right? Well, maybe not really. I kind of made that up. But if you can identify strong triggers, let's go to the live market real quick. Guys, I'm wound up. I'm so excited. This is the NASDAQ, and the NASDAQ's going up, right? And the NASDAQ's going up, and the triggers are a little bit above the large. We have some momentum to the upside. That's how quickly that read happens. The S&P, the market's going up, but my small triggers are not outside of my large triggers. That is not strong triggers. And then crude oil. Crude oil says it's going down, and the smalls are below the large, but the large are not wide. They're not angled in the direction of the trend. If you commit to the simple look, burn it into your brain. It's that strong, wide, in the direction. This is your best of the best advantage. And the opposite of strong is weak. Weak triggers means that the small triggers are inside of the large triggers rather than outside of the large triggers. Your scissors have closed. And when you have weak triggers, anything can happen up or down, guys. It becomes really kind of a crapshoot. You don't have a market that's likely to continue in the direction of the trend. You don't have the speed to break areas. And this isn't enough to cover a lot of mistakes. So focusing on the strong trigger look, this is the most advantageous look, whether it is up or down, for using your smaller, faster chart, that refinement chart, where you're going to buy Fibonacci support or sell Fibonacci resistance with the trend, with the strength, with the direction. On your large chart, that one bar, that broad stroke of a brush, is going to look like it's forming a tail. We don't trade the tails. We don't wait for tails to form to take trades because we use a refinement chart. But after the fact, and this becomes a study tool, you can go back and circle tails on a larger, faster chart. And if they line up with areas on that smaller, faster, or on your large chart, on your smaller, faster chart, you know that you have the rules met for a high probability trend trade. And this allows you to go back and study this look and really commit it to memory. So rule number one, guys, you're going to have a pretty good way to see it. The colors don't match. I can't have it. Let's go back again. All the colors match, but there's no separation. That is not my best momentum. And look at how your small chart fluctuates all over the place. And weak triggers, and look how the market appears to be pushing down. Guys, you can do this all day. And this is the best way to study this. I'm going to show you. I'm going to remove all of my indicators with the exception of triggers. And when I do that, I'm going to open it up. Strong triggers push down, right? You get indecision. Strong triggers push up. Weak triggers, there's a fight. Weakened triggers gives you a push up. Strong triggers continues down. Weakened triggers, little push up. Over and over, guys. Strong triggers push, they weaken, you get a retracement. Strong triggers push, weakened triggers, down it goes. Strong triggers push down, probably right into a key area. Scroll back. Look at this amazing momentum, guys. Learn to trust it. Learn to believe that odds favorable momentum is one of the greatest advantages that you can give yourself. And what you're going to find is you're going to be very comfortable not taking trades that don't give you that very distinct advantage. And rule number one does not happen all the time. Rule number one is not a nonstop endeavor, guys, because there's always fights in the market. So you may go from odds favorable to anything can happen. Anything can happen gives you a reversal. From the reversal, maybe at a key fib, it gives you odds favorable. There's your tail. Good morning, Miss Debbie. And off it pushes until they're weak again, and it reverses again, and down it pushes. There's your tail. You guys are getting in. And then you get into a transition phase, guys. Remember I said that all the colors have to agree. If you're going to have odds favorable momentum to the upside, your background has to be green. Your large triggers have to be green. Your small triggers have to be green. You're going to find times where the large might be red, but the smalls are green. Well, it's impossible to have the advantage of momentum like that. You may have a time where the background is green, but the triggers are red. It's impossible to have rule number one met with this look. What you're seeing is a time where buyers and sellers are fighting. The people that control the market, the people with the deep pockets, half of them want it to go up and half of them want it to go down, and neither of them can find an advantage. And you'll see that in the trigger lines. This is where a lot of people are tempted to predict what the market's going to do. Well, I think it's going to go up because XYZ, or I hope it goes down because of XYZ. If you train your body, rule number one isn't met, let me sit on my hands and do nothing. Eventually somebody's going to win, and they will provide you the momentum that you need to look for rule number two. Is everybody cool with rule number one, guys? It's just momentum. Give yourself the advantage. It breaks areas, it covers mistakes, it pushes that market in the direction. I think it's the most important of the three initially. And without it, I won't even look for rule number two. Rule number two is going to give me the advantage of a clear path. Rule number two is making sure that I'm not trading into those key areas, those termination conditions. And those areas that can behave as termination conditions are just lines on the large chart. That's all they are. It may be red Fibonacci resistance. It may be blue Fibonacci support. Sometimes it'll be these yellow one-to-ones. It can also be a divergence high or a divergence low. And what divergence means is that there was a loss of momentum. So divergence will always happen from a pivot. If the buyers are in control, if they're pushing, the momentum is great, everything's cranking to the upside, and the pivot's created, and the sellers steal the momentum. And I want you to think of it that way. The sellers stole the momentum from the buyers. You're going to see this magenta line print right about the third bar. So the actual price and loss of momentum creates this line. If the sellers are in control, they're pushing down, the momentum is great, and the buyers say, nope, we want to go the other way, we're going to steal your momentum, you'll see this cyan line. And it happens about the third bar up. So price creates this divergence low. And that's important on the recipe for termination conditions. But this is a great roadmap for new users as well. This is what you're looking at on the large chart. These are the lines that can stop, reverse, create a fight. These lines are where decisions are made by the powers that be. That's where these guys are taking profits, entering trades, and you never have to get caught up in their decision-making process with the simple rule of identifying termination conditions. And I'm going to give you that little setup right now. I'm going to show you what we're looking for. And it starts with price reaches an area. And when I say price reaches an area, I mean these dynamic Renko bars, your price bars, guys. They're just representation of price. So when the price falls from 53.60 and reaches 53.23, the price bar reaches the area. All you have to do is ask yourself, where are my triggers? So if price is pushing down and reaches an area of support, if your trigger lines remain above the area of support when price is there, sit on your hands and do nothing. This is a termination condition. This is an area that may stop the market. That's really the whole recipe. Price reaches the area. If the trigger lines remain below, it's a termination condition. You don't have a clear path. And you're going to be able to go back and see this over and over. Here are termination conditions at a high. There's one of those divergence lines that prints. Guys, this is not a termination. This is simply a loss of momentum. But let's go through the recipe. Price reaches the divergence high. The triggers remain below. I have a termination condition at a high. If this termination gives me a reversal in the market, I'm going to call this a strong top. And a strong top is the precursor for the highest probability trend trade you can take. The next slide, price comes up even with odds favorable momentum. It reaches Fibonacci resistance. All you have to do is ask yourself, where are my trigger lines? If they all remain below Fibonacci resistance, you have a termination condition. No more long trades into that area. Keep yourself safe. Wait for the reaction. Either the buyers or the sellers are going to take control. We just don't know. Let's avoid the fight. And then here we get price reaches one-to-ones and resistance. and none of them break. So you guys know not to go long because it is a termination condition. And this one shows a little bit of the fight. The buyers are in control. They reach a key area and the sellers push back. And they push right back to Fibonacci support. But notice that the triggers don't break support and the buyers tend to push back. And guys, this is that 90% of your chart reading. This is a great way to avoid the fight between buyers and sellers, to wait for them to give you advantages, and then you take advantage of the advantages provided. Here they are at a low. That was redundant. Price reaches these yellow one-to-ones, and when it does, all you guys are doing is asking yourself, where are my trigger lines? If they're above that area, those yellow one-to-ones, no short trades. It's really that simple. You're saying to yourself, it's either going to break, it's going to reverse, or there's going to be a fight. I don't want to be in the middle of it. No more short trades. Price reaches support with odds favorable momentum. None of the trigger lines are capable of going through that area, guys. Sit on your hands and do nothing. Wait for the reaction. If a termination at a low reverses the market, we're going to call it a strong bottom. Strong bottom is a precursor for the highest probability trend trade that you can take. So guys, is everybody cool with the idea? This is how you define a termination. And it really is a pretty simple recipe. Triggers don't break. Sometimes they overrun a little bit. But what you're going to see, and the S&P is not given a great example because of the news release, price pulls back to resistance, none of the triggers break. You guys aren't going long, even with a green background, even with what looks like odds favorable momentum. You can sit on your hands and do nothing. Look at that giant run up straight into Fibonacci resistance. The triggers don't break. They fight for a minute, and then ultimately they push the market down. They do it with momentum. There's one of your tails, guys, and the market's still pushing down. And you notice that you have strength in triggers as you got to support, and that support didn't seem to create much of a reaction. That's going to be the second half of what we're doing. When is an area clear? When have I gotten back into a safe zone? It's a pretty easy recipe as well, guys. If no triggers means no trades, if no triggers means termination condition, when your small and your large triggers get to the other side of an area, that area is considered broken. That area is no longer a threat. It's in the rear view mirror. Resistance behaves as support. This is when the path is clear once again. Josh, both small and large got to the other side of support. Support is now resistance. You now have a clear path. Absolutely. Price reaches. I don't know what the reaction is going to be. Small and large get to the other side. The area of support is broken. It's now behaving as resistance. My eyes are on 73 flat at that big key fib. Hopefully the momentum carries it down. Hopefully I get a pullback on a smaller, faster chart to take an opportunity to get to that next area. There's a great example of areas breaking right there live in crude oil. And then guys, there's one more scenario. Price reaches an area, no triggers break. This is just don't do it, right? There's no reason. Wait for the reaction. Let's see what happens. Small and large smash through. The area is broken. Let's keep going in the direction of the trend, in the direction of the momentum. Hey, look, there's a tail. And then we come into your medium probability scenario. And I told you that we'd be talking about it. When I said strong triggers break areas, guys, that is one of the most true statements ever. If areas never broke, we'd be stuck in between two areas for a lifetime. When you have odds favorable momentum, and guys, I can't stress this enough, you have to have the best of the best trigger look. If those small triggers smash through the area, 50% of your trigger lines smash through and above this area of resistance, but the large triggers haven't made it yet, so the area is not broken. Guys, this 69.80 spot, with all of that momentum and the smalls through, it has the potential to break. Potential, right? I can take my wife out to dinner, go see a movie, walk her up to the doorstep until our lips meet. It's just potential for a goodnight kiss. Until both triggers break, it's just potential for a clear path. This is rule number 2, not met, but it has the potential to break with all of that momentum, which means that we have to have all the momentum in the world to take a shot at this trade, that we want to have the best of the best entry area to take a shot at this trade. And this will be your first medium probability scenario. And it's what we call a 50-50 look. 50% of your triggers break, 50% of your triggers not. It's not a high probability trend trade, but guys, you can make a lot of money on medium probability trend trades. And when you know the path isn't clear, it gives you the opportunity to manage assertively. Your chart reading, what you're building with the high probability trend trade, is going to allow you to manage that assertively, to take quick profits, to get to a zero loss level, and to read your charts and make sure that you're not forfeiting those advantages. So these are the possibilities. It's either broken or it's not initially, and then we'll start trading that potential just a little bit and making sure that we have all those advantages in place. But I want to go back to the user guide, and I just want to go through a couple examples. Price, all your triggers, price reaches, the triggers start to break. Guys, this isn't a termination condition because the triggers broke through. And then I get one of those divergences. The buyers steal the momentum from the sellers, guys. There's a little bit of fight starting here. And the buyers push it up. They give it a good shove. But the sellers aren't done. But this loss of momentum creates a very distinct, a very readable line in the sand. When price comes back and reaches that line in the sand, you guys go through the process of asking yourself, where are my trigger lines? Well, they're all above, which means that this is a termination condition. We call this a pivot stop out of a prior divergence. Pivot stop outs are strong, guys. It just means that the buyers pushed and then they eased up and they let the sellers think that they won. And when they get to that line in the sand, the buyers unload on them. They're like, hey, come on back. Let's stop you out. Let's get you out of the way. It'll make it easier for me to go up. And guys, these pivot stop outs are powerful. And if they reverse the market, that's a strong bottom. That is the precursor to the highest probability trend trade that you can take. And these pivot stop outs, while powerful, become even more powerful when they coincide with those key Fibonacci areas. So here we get this awesome example of how 90% of your day is spent reading indicators, waiting for advantages, because the buyers were very much in control and they pushed all the way up to Fibonacci resistance. And when they got there, all of you brilliant people said, my triggers are below. I'm not going to go long into this area. That's a termination condition. And you sat on your hands and you did nothing. And thank goodness, because it bounced, and it bounced hard, and it pushed all the way back to Fibonacci support, at which point you guys said, well, all my triggers are above. Dang it, I can't go short either. I keep waiting for this market to do something. I can't go long. I can't go short. What on earth am I going to do? Some of you made the opinion, well, it's red, I'm going short anyway, and you got stopped out because you fought rule number 2. You didn't have a clear path, and the market pushes all the way back up to resistance. That's a termination because the triggers are below. That pivot stop out creates itself. Another termination, and then a second level of resistance. Guys, they're stacking it here. And what you're going to notice is that the trigger lines were strong going in and they're weak on the second retest. The market fluctuates. Buyers and sellers duke it out all the time. This termination condition with weak triggers gives you separation between the small and the large coming off of the area. Price hadn't reached support yet, which means that your path is clear. And there is one of those tails, guys. This is your 90%. This is where opinions get you in trouble. This is where not having advantages is going to ruin your day. But if you sit tight and wait, somebody always wins. That's your 10%, guys. And a high probability trend trade that happens after a termination condition, that's the one that typically runs the furthest. That's your best of the best. That's a trade that typically wins 70 to 80% of the time. It's the patience to do nothing when there's nothing to do that's going to allow you to keep that money in the bank. One more picture to that effect. Let me minimize this one. And I think that trust in termination conditions is a huge part of the learning process. Scroll back on charts and look at these termination conditions happening. And you'll see with odds favorable, the market pushes all the way down to these yellow 1-to-1s. And when it does, none of the triggers are capable of breaking. And all you have to do is pause for a moment and just say to yourself, my advantage of a clear path is gone. My money is worth a clear path. I don't want to get caught in that fight between the buyers and sellers. Whatever helps you not take that trade into a fib or a 1-to-1 that the triggers haven't broken. And once again, thankful because the buyers pushed really hard enough to pull you out of a short position. But you notice that they went right to resistance and all the triggers are below. And guys, that's a termination condition, textbook. So I'm not going long yet and I can't go short. And the sellers push back and I don't have momentum. I'm not going short and I can't go long when the buyers fight back and I can't go short when the buyers fight back and I can't go long when the buyers fight. And eventually the fight subsides. Eventually all the triggers get above resistance and it behaves as support. We couple that with odds favorable. Guys, there's your tail. Once again, doing absolutely nothing when there's nothing to do. This is your 90%. Train your body to do nothing when there's rules not met. This is the 10% that pays dividends. This is the 10% that has people reaching their goals in one trade. This is the 10% that typically runs the furthest. This is the 10% that wins more than it loses, that creates confidence from the memory of success. Understanding the advantage of momentum, embracing the advantage of a clear path, guys, it sets you up. Is everybody good? If price reaches an area, no trade. Notice that the momentum was waning there, and I see a loss of momentum through divergence on the small chart. There's a pretty good lesson right here that we're about to talk about. And when we talk about entries, we'll talk about why these areas on the wrong side of the triggers is such a bad idea. But I want to talk about one more termination condition. So far, we've talked about lines on the large chart. Lines on the large chart, they're easy to read, they're easy to see. You know about them way in advance. And all you have to do is let price reach it. Hopefully, you're trading to it. It's a great place to take profits if you were short. And when price reaches a line on the large chart, no more trades. Is everybody good with that? Give me a Y, please, if you're okay with that. Because this is a huge lesson. This is an important lesson, guys. This is a lesson that we all learn the hard way. So I repeat it a lot, and I spend a lot of time on termination conditions because I want you to believe that these things can ruin your day. Sometimes the market has a clear path and it just seems to turn. And sometimes it has odds favorable in a clear path and it just seems to turn. I'm going to give you one more termination condition. But guys, this one is going to happen on your smaller, faster chart. This is a termination condition where you're going to use that refinement chart, that faster chart, that one that's producing 15 to 30 bars per one bar on the large chart. And you're going to be able to see losses of momentum through those cyan lines again. And three divergences in the same price range, it may terminate the trend, guys. It may stop that thing from going down. It may stop the market from going up. It may be a permanent reversal, or it may just be a push beyond your best entry, right? So this is a giant red flag if your small chart has three divergences in the same price range. It's a termination. The path isn't clear. No more short trades. It becomes more powerful if those small triggers work their way inside of the large triggers, guys. That is very much a visual, anything can happen triggers, that loss of momentum. And it becomes more powerful still if you are a patterns trader from the past. It creates a head and shoulders pattern if the third pivot is higher than the previous from a low or lower than the previous from a high. But you'll be able to use this three divergences at a low or this three divergences at a high. And what it's going to do is it's going to help you recognize when your large chart is changing, even though you can't see it because it's such a slow moving chart. And then the other half, and you're going to love this, is even if you do take the perfect trade, the high probability trade, and every advantage is present and you're rocking it to the downside, if three divergences print, this becomes a, hey, let's get out of that one. It may push against us, right? Let's take some profits. Let's get to break even. Let's not wish and hope. Let's just simply read our charts and see that the advantage is gone. And this will become a huge management tool for you, especially as you begin to get into those medium probability trades. So guys, that is rules 1 and 2. That is the advantage of momentum. And that is the advantage of a clear path. And all of this happened on the large chart. Areas were defined on the large chart. Momentum was defined on the large chart. Direction was defined on the large chart, right? Keep it easy. The large crowd says we're going up. The large crowd says that there's nothing in the way to create a bounce. So we're going to let the small crowd fight them. We're going to let the small crowd fight the large crowd. And guys, this is where the magic happens. This is where the entries come from. This is where rule number 3 comes into play. on that smaller, faster chart, the refinement chart. And rule number 3 says that you're going to use a limit order. You're literally going to wait for the market to come to you. And you're going to use that limit order to buy or sell a pullback, that small retracement in price that's created by the small crowd, by the people that don't have what it takes to go against the large crowd. And you're going to let that pullback be at an area. So now we're going to use the lines on the small chart for entry, as opposed to using the lines on the large chart for terminations. And those areas need to be inside of what we call favorable large triggers. And favorable large triggers means on your small chart that your large triggers and your synthetic triggers are overlapping. Your large triggers and your synthetic triggers are one on top of the other, like snakes riding piggyback. Because when these are tight on top of each other, it's the smallest possible space for the areas to be inside of them, which means that you're going to have the least amount of risk on this trade. And guys, that's a wonderful feeling as a new user, knowing that even if it's part of that 20 to 30% that doesn't work, you're going to minimize risk by waiting for the perfect window of opportunity. And that's exactly what you've created with those favorable large triggers. So we're going to go through the process real quick. I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So when the large chart says it's time to go, this is the look on the small chart, guys. And I've made the decision. It's time to enter a trade, but I want to follow the rules. I'm looking at my favorable large triggers. Large are up, synthetic are up. Everything says up. The background's green. I've got odds favorable momentum. And I'm looking for the areas that will fall inside of these triggers. The areas where trades happen, where they begin, originate on a smaller, faster chart. We're looking for fibs. We're looking for the mid band. And guys, I want you to pay attention to the color here. We're looking for yellow one-to-ones. Yellow one-to-ones, not those little pink small swing ones. We're not worried about these. Yellow one-to-ones. And I'm looking to see which ones are going to end up inside of these triggers if I get a pullback. The triggers are coming up like a shark about to breach. And everything says up, and I'm not jumping in because rule number 3 says I'm waiting for a pullback. I'm waiting for that small crowd to fight. In the small crowd fights, I'm going to see a reversal bar. This reversal bar lets me know that they're going to try to push, that they're going to try and go against momentum. They're going to try and go against that clear path. There's nothing to bounce off of, but they're still going to try to make it go down. When I get this reversal bar, and here comes that window of opportunity, guys, I'm going to create it by recognizing my large favorable large triggers coming up, and I'm going to look for the areas that are falling within. If I have an area a tick or two above those large triggers, it's okay. That's going to be part of my window because the reality is these things are working their way up while this one is coming down. And I think I just answered your question, Dwight. Um, If I'm a tick or two above these large triggers, I'm okay with that because large triggers, these favorable large triggers, guys, these are moving averages. And moving averages, price corrects itself. This is why it pulls back to these areas inside of favorable large triggers. Price accelerates away from them, and it's going to try. This is just a little correction in price. This correction in price, if I give it an area to bounce off of inside of these triggers, it's like throwing a tennis ball up against a brick wall. It creates a ricochet point. So Dwight, if I'm one tick above it, I'm still at that correction point. If I'm two ticks above it, I'm still at that correction point. But the flip side of that is if I'm on the other side of that correction point, well, that's kind of bad news. I don't particularly care for that one. So if I'm in between the reversal bar and the large triggers and maybe a tick, because I'm expecting it to get to those triggers, I'm okay. I feel good about it. That's still my window of opportunity. And it goes from the highest point of support to the lowest point of support, guys. And your job is to activate a limit order right at the top of that window. And I'm going to go through the whole process here in pictures of how we're going to recognize that entry. And it begins with the large chart says up. The large chart has a clear path. And I'm going to type this one out because it's Friday. Guys, the large chart leads the way. Odds favorable momentum, no termination conditions. Guys, rules 1 and 2 are met. Once they're met, I'm going to wait for a reversal bar on the small chart. And when I get the reversal bar, first process, I'm going to identify from the top of my trigger lines to the bottom of my trigger lines. Remember we said that the advantage is best when they're really one on top of the other, when they're really tight? Because it's inside of these trigger lines that I'm going to look for my areas, and that's going to create my window of opportunity. And that window of opportunity, whoops, is going to extend from the highest point of support, the mid band, to the lowest point of support, those yellow one-to-ones. Whoops, there we go. Trying to kind of shade it a little bit there. And what this shaded area represents is the point where the market is most likely to continue. Josh, I'll cover that in a little bit. This shaded area is where if that market is going to continue up after the small crowd fights, it's going to bounce somewhere within this area. But because my large chart has no spot for a bounce, because my large chart has the best momentum I could ever hope for, I'm going to activate my limit order right at the top, right at that highest point of support, because I don't want to miss out on this trade. I don't want to trip over a couple pennies to try and save a few bucks. So if it hits my limit order right at the top, guys, I'm in a long trade, and I'm in a long trade with every advantage that I could hope for. I've got odds favorable momentum dictated by strong triggers on the large chart. I have a clear path dictated by no termination conditions on the large chart. And now I am entering the market at the point where it is most likely to continue, dictated by the window of opportunity produced by the small chart. Does that make sense, everybody? This is your entry. This is your focus for 20 days, is getting in right at the top of that window. It's going to take a little practice. And some things that I want you to think about. If it goes to the second layer, it's okay. You're still in the window. And if it goes to the third layer of support, it's okay. You're still in the window. Don't panic. You're going to see red numbers every now and then. Even if it goes all the way to the bottom of that window, you are still in a rules-based, high probability trend trade. And I want you to be okay with the idea that it's not going to go positive instantly all the time, that it's not going to start winning the second you enter that trade all the time. But the cool thing about what we do, and I really think where the biggest advantage comes in, is if we know where the market is most likely to continue, then we know where the market shouldn't go. And we're going to place a protective stop outside of that window of opportunity, about 4 or 5 ticks below the window of opportunity. Guys, if the market pushes through, if it continues beyond those one-to-ones, beyond those favorable large triggers, we're going to take a loser. Hey guys, it's okay to take a loser. In fact, I don't think I've ever met somebody that doesn't take losers during the day. I took 2 or 3 during the day, and I'll tell you what, I hit my goal before we ever started this class. It's okay, it's a part of it. Because anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's a cost of doing business. Small losses are a normal part of a positive equity curve. And one of the cool things is because of rule number 3, we can minimize our losses with that protective stop outside of the window of opportunity. Guys, I want this entry to be your focus for the first 20 days with me. Because what happens is when you learn to get into the market at the best of the best spot, it creates the least amount of risk. When you learn to get into the market at the best of the best spot, what it does is it also creates the largest run for your profit potential. Once it moves in the direction of the trade, you'll even reduce your risk further. You'll put a stop below that. And guys, this is the key for the new user. Because what this trade does is it teaches you to recognize some very key advantages. It teaches you to understand that momentum is a game changer, that momentum is the reason we look for trades initially. And that's rule number 1. And then that a clear path means that these guys that are in control, they haven't reached an area where they need to make decisions. I've got room to that decision-making point. And then the smaller, faster chart gives me a bounce point inside of those favorable large triggers, and it gives me an opportunity to enter the market with the least amount of risk and the most profit potential. And guys, this picture right here is going to show you how you can study it. If your rules are met on a large chart, if you have odds favorable, if you have a clear path, and you're just scrolling back historically, you woke up and you're like, man, I'm going to prove Mark wrong. I'm going to circle this tail and I'm going to show him that he's full of beans, right? The rules are met. If that circle or square in this case lines up with support inside of favorable large triggers, you have a high probability trend trade, ladies and gentlemen. You have the best of the best. You should be taking this picture, annotating your chart, and reminding yourself, dropping it into my personal trade setups, that I never want to miss this trade, that I never want to miss odds favorable momentum, that I never want to miss a clear path. I never want to miss, and this becomes the basis of my plan. Odds favorable, everything says up, pull back, they entered a little earlier. But guys, it just never ends. These happen all day, every day. Here's a high probability trend trade short. Odds favorable momentum. The path is clear. We're coming from a termination that created a full reversal. Look at the window of opportunity. Whoever submitted this picture in class knew exactly where they wanted to enter that trade long before the trade ever got there. And that's what you're going to be able to do, guys. And it's just a little bit of study. Go back on the large chart. Let's go find one of those tails. We'll see if crude gave a good one here. That's one of those potential to break areas. But if I circle the tail coming from a good top with all that momentum, I'll be damned, it comes right back to an area of resistance inside of favorable large triggers. This is your pattern recognition, guys. This is what you're looking for 20 days. Learn how to take that trade. Learn how to be comfortable with that trade. Learn how to recognize the advantages that a termination that reverses the market provides. Learn the advantages of momentum, and learn that when areas have the potential to break, you can still capitalize and take that run down. And then the flip side of that is when the momentum starts to decrease a little bit, when those small triggers begin to return, even with a clear path, the momentum isn't its strongest. Notice that the momentum isn't its strongest here as well. And your areas are no longer inside of favorable large triggers. And Dwight, this is what I was talking about. When your areas fall behind the correction point, guys, that's kind of off base. That's not what we're looking for. Because we're expecting price to return to the large triggers, to those favorable large triggers. And by having an area inside of them, it gives it something to bounce off of. When those areas start falling behind, you just don't know. You don't know if it's going to bounce. You don't know if it's going to stop. You don't know what's going to happen or where it may happen. And that third advantage goes away. And guys, that's it. Welcome to Nexgen. This is what we talk about for the first hour every day. We talk about a high probability trend trade, a trade where each indicator on every chart agrees for the trade. A trade that typically wins 70 to 80% of the time. A trade that creates confidence through the memory of success. And I'm giving you right now a checklist. Print this out. Put it on your desktop. Grab your biggest, brightest crayon, and every time you take a trade, police yourself. Make sure that you have these advantages. Your investment is worth it. Your money is worth it. Is it coming from a good top or bottom? Your weekend homework is, if you've never watched this video, watch it. It talks about good tops and bottoms. It's super informative. Did you have odds favorable? No termination. Was there an area inside of favorable large triggers? Never in the history of this checklist, ladies and gentlemen, have I had people mark yes, truthfully, to all four of these and do worse than 70%. There are people that have built trading empires on the high probability trend trade because they know that you don't need anything else. You just have to be really patient to wait for them to happen. For my visual folks, here's the exact same checklist, but here's pictures of what it means. There's a termination that creates a full reversal. This is the best case scenario for a high probability trend trade. Here's odds favorable momentum to the upside, odds favorable momentum to the downside. And guys, there's that anything can happen preceding a reversal. You see visually exactly where your advantages lie. Now you just got to commit that to memory so that you can always have that advantage. Not broken, it is broken. It has the potential to break visually right there for you. And then there's that window of opportunity, getting in where the market is most likely to continue. AE, was that helpful? A little bit. If you want to go further into it, let me know. I'm more than happy to. But all of this is visual, guys. All of this is right there for you. Learning to trust. And I'll tell you what, things that scare new users. Selling the market when the market is going up is terrifying for the new user until you develop trust. So you have to go back and take these pictures and see it work, right? Small triggers on a small chart. They have to turn against you. Otherwise, you're probably not going to get back to that area. It's a small chart refinement chart. The large chart defines your momentum. And then sometimes these lines being close to them on a small chart, or maybe even one or two divergences on a small chart. People are like, oh, but divergence printed, I can't take that trade. And that's where you have to really embrace the rules and embrace the idea that the only thing that I'm going to let kill a high probability trend trade for me on a small chart is three divergences in the same price range. All you have to do is practice, guys. You have to practice. Use the checklist, print it out. Put this one on your desktop, right? Put the other one on your computer, study it for a few minutes before you start trading every day, and then trade a plan. Have a plan. Have a concrete set of rules to get into the market. This is my biggest gift to you guys. This is the KISS plan. This is the keep it simple, silly plan, or sunshine plan, or stupid if you're not afraid to be a little controversial. Keep it simple, guys. Keep it focused. Give yourself the advantage of learning to be a chart reader. This is a stepping stone in your learning journey. This is your foundation. This is teaching you to be a chart reader. And it's designed to optimize your chances of success. I love that word, optimize. It is going to optimize your chances of success with the high probability trend trade and the 50-50 trade, that first medium probability trade that a lot of you are going to take. Through simulation, study, class feedback, and continuous practice, you will create a plan tailored to your goals, guys. You will create your plan, not my KISS plan. You'll create Cindy's plan or Mike's plan or Jeremy's plan or Bogsy's plan, right? But this is going to give you something to focus on until you have the chart reading to do it. And it's your experience reading the indicators that's going to build that plan. So when we talk about a simple plan for consistency, consistency is the key word, where everything looks the same, where you always have a statistical advantage. Never fight the large chart direction or triggers. And I can't stress this enough, guys. This will eliminate 60% of the mistakes that the typical new user makes. Don't fight the large chart direction. Just go with the flow. It's like a lazy river at MGM. Grab a pina colada and let the current take you. Don't fight the momentum. Because the large crowd, the people in control, establish that momentum. Why on earth would you fight that? You're going to define your entry, guys. This is your first 20 days, your first 2 weeks, your first week if you're exceptional. Define your entry. Get into the market at the absolute best of the best place. Your checklist keeps it mechanical, pragmatic, and opinionless. If my rules are met, then I will enter the market. If they are not, I'm going to sit on my hands and scratch the dog behind the ear, something like that. Once you get into the market, once you take that best entry, well, then you have to do something with it. You've got to learn to manage your trades. And I think that the most important lesson that you can take in management is remembering that the large chart led the way, that the large chart said you had odds favorable momentum. The large chart said you had a clear path. You're allowing the large crowd to dictate when it's time to take an entry. And when they do, you're going to get into the market at the area inside of favorable large triggers because that's where your advantage comes into place. You're in the market, best of the best, bounce point inside of favorable large triggers. And your initial stop goes where the market shouldn't. Your initial stop goes outside of that window, 4 or 5 ticks, right? And you're done. At this point, you're in the market. You've given yourself every advantage that you can have for this high probability trend trade. You've defined where the market is likely to continue and you know where it shouldn't go. And that's where your stop is. And if it comes back and hits your stop, guys, you don't cry or moan or swear. You don't kick the dog. You say, damn it, that was just a cost of doing business, because anything that wins 80% of the time has to lose 20 to 30. Every 10 trades I take, I'm going to lose 3. Every 100 trades I take, I'm going to lose 30. It's a part of doing business, guys. But the cool thing is, with all those advantages, you're more likely to get a reversal bar in the direction of the trade. And if you do, you're going to reduce your risk even more. You're going to drop it 2 ticks above that reversal bar going short, 2 ticks below going long. And what you've done is you have effectively managed your risk before you ever went after your profits. And guys, this is a characteristic of mature traders. You have even less risk. You're even closer to your profit potential. And there's nothing to do now. You're either going to get stopped out for that small loss, a more manageable loss, or it's going to run to your first target. And for the brand new user, for the KISS plan user, guys, that first target's only $100 in the distance. Because let's be honest, When your large chart looks like this, with all that best of the best momentum, and your large chart doesn't have anything to bounce off of, 100 bucks is pretty easy to hit more often than not. And $100 creates confidence because you just got paid. NinjaTrader just said target hit. Everything is good in your world. The serotonin's flowing, your palms dry up, your heartbeat slows. Guys, this $100, while it isn't a huge number, represents your success, and your success is what creates confidence. And you're going to move your stop to break even. So not only did you just get paid, you have zero risk in this trade. I'm going to tell you right now, a break-even stop is not the best stop. It's not the best stop. There's too many fluctuations in the market. But for the brand new user, by going break-even, by getting paid, it reminds you once again that the large chart is why you're in this trade, that the large chart says down, it says speed, it says everything has advantages. You already took the absolute best entry. You've already got money. You're just going to sit there break even, and it's either going to hit your second target or it's going to stop you out break even. But if it hits your second target, guys, it's only $300 in the distance or $200 in the distance. And um, what that means for you is that you're out of the market already, typically in a minute or two tops, and you just made $300 and you're feeling freaking amazing. And I'm going to tell you right now, $300 is a pretty substantial trade because if that's all you pull off once a day, that's a $1,500 week. $300 in profit a day is a $1,500 week. It's a $6,000 month, guys, and you know that's a $72,000 year. 99.9% of you aren't going to be satisfied with $300 a day, guys. $500 a day is a $126,000 year, right? And as you get better reading your indicators, as you start to understand where the market is more likely to go, what you're going to do is you're going to work on your management and you're going to be able to start holding for these bigger moves. I'm still going to get paid, but with all this momentum and this clear path, I'm going to get paid one more time down here. And your $300 trades turn into $500 trades, $600 trades. And it really starts to get the power through your chart reading to do more with these trades. So I'm going to drop the KISS plan in the room. You are not obligated to trade it. You're not obligated to follow it. But I'm going to tell you right now that I've had brand new users. I've had people in their first 30 days with Nexgen fund those prop firm accounts with the KISS plan. Avoid excessive losers with the KISS plan. Find success that they were looking for, that they know is available to them, through really keeping it simple as a brand new user, and not trying to make things happen, rather allowing the people that control the market to create the advantages for them. And guys, my favorite picture, and we're going to do this before break. This is Norbert, and Norbert is the people that move the market. This is the big money investor. This is the guy that creates trends, that creates momentum. This is the guy that reacts to those key Fibonacci areas. This is the guy I don't want to mess with. I want him to do all the hard work. I want him to make things happen with his money, with his risk. And then I want to be a remora, not a bottom feeder. I'm just willing to idly sit by and let this guy do all the work. And then once he does, I'm going to take my chunk out of it. I'm going to hit some base hits while he's holding for the next area in space. I'm making $400 or $500 a pop, and I'm getting out and I'm waiting for the next round of advantages. Guys, if you remember that you're not in charge, it makes it easier to respect these rules a little bit. And here's the guy that tried to be first. I saw a blue fib and I had to go short. Norbert eats him. He goes to the next level. You lose all your money. This guy is out of the game. Next gen users are still holding strong. So are there any questions? Let's do an analysis. Small below the large are beginning to widen. Does everybody recognize? Give me a Y if you see it, guys. This is how quickly your reads happen. Price reached Fibonacci support, not one trigger line broke through. I'm not doing anything right now. I don't have a clear path to the short side. I don't even have direction or momentum to the upside. This is part of your 90%. Give me a Y in the room, please, if you're with me, especially if you're brand new, guys. This is huge. This is where opinions happen, and I want you guys to just start avoiding those. Odds favorable momentum, and dang it, it hit a blue fib. And none of the triggers broke. And once again, rule number 2 is say just Pause, Mark. Let's wait a second. It's either going to break or it's not. You don't have to guess. You start to see these fluctuations. If you don't think decisions are made at fibs, guys, look at what your small chart's doing inside of this one bar. You can see the dance between buyers and sellers. The sellers are trying to continue to push it down. The buyers are starting to fight a little bit. We're starting to see a little momentum loss, right? We're starting to see that faster indicator change a little bit. You are literally witnessing the fight at this key Fibonacci area, and it made it one tick past it, guys. Fibs are freaking amazing. And then the S&P, small's below the large. The large are wide. They're angled in the direction of the trend. There's a reversal bar. If this market is going to continue down, there is one line inside of favorable large triggers. If I'm a rules-based trader, I have a limit order just below that line, just inside of favorable large triggers. And as I begin to recognize patterns in the market, I know that because that's not a termination condition that created a full reversal, this isn't in that 70%, right? Because I needed a termination that created the full reversal. The midpoint offers a nice spot for a bounce. But I'm still, because my rules are met, because the momentum is great, because I have an area inside of favorable large triggers, that's my trade, guys. That's straight out of the KISS plan. That's every rule met. And I have no control. It either hits me or it doesn't. It either wins or it loses. It doesn't matter to me one way or the other. And unfortunately, it missed me by a tick, and down it goes, just like the rules said it would. Pretty cool. Well, not cool because I missed it. I hope maybe one of you guys caught it. And if you didn't, that's okay. There will be more. There is always more. But did you guys see how that happened? And watch this. If I put the box over that, it's on the tail, ladies and gentlemen. Missed me by a tick too, Joel. It happens. It's okay. Is what it is. Guys, that's my first hour every week, every day of every week. We talk about advantages. We talk about what's going on in the market. We talk about what's bringing you confidence, what's giving you the best. Missed you by a tick, Cindy? Guys, I'll tell you what, I want to see 42 of you saying missed me by a tick. I want to see 42 people saying, damn it, missed me by a tick. Because I followed my rules and I had everything right where it needed to be. And it just didn't work out on that particular pullback. Guys, I'm going to take 5 minutes. I'm going to go stretch my legs real quick. If you have a question, post it in the room. If you have a chart, post it in the room. When I come back, we're going to start looking at your charts, and we're going to relate everything to advantages, guys. Everything on your charts is going to go back to momentum, a clear path, and an entry area, no matter what kind of trade you take. And what we're going to do is we're going to be able to just kind of start the refinement process, the feedback process. I'll see you guys in 5 minutes. That is a great example. I hope you guys heard me when I said it. When you're not coming from a termination that creates a full reversal, the midband is a potential bounce point. And sure enough, it gave just a little bit of a bounce there, a little bit beyond that window of opportunity. You'll notice that the large triggers and the synthetics began to split. Just had a little bit to do there, just a little bit of indecision. So guys, we're going to go into the second hour here, and I'm going to scroll to the top. I hope you can see that. I have to go all the way to the top. I'm going to look at your charts. We're going to talk about advantages. We're going to look at disadvantages. And I've got to remind you guys one time. Let me get over here. That's not it. When you present a chart in the room, guys, when you give me something to look at, tell me what you're looking at. Tell me why you did what you did. Even if it's not a high probability trend trade, even if it is a momentum trade or whatever, tell me what you did. Tell me why you did what you did. I remind you, this is an educational room, and we like to really focus on that and make sure that the education's coming through. And there are no wrong answers. Guys, there are no wrong trades. It's like just because it is not my trade doesn't mean that it isn't a good trade. Just because it's not on my plan doesn't mean that it isn't a part of your plan. So I don't play the trade police. What I do is I talk about advantages and I try and keep it educational. So everything that I see, we're going to go back and we're going to talk about why you did what you did, showing me where you entered. Maybe we can find a way to make it better. Maybe you just did it perfect. And then talking about exits as well, because management is the second half of it. So I'm going to scroll up to the top right now. We're going to start looking at pictures. And I want to start with Kali. I sent you a message, and I know that it was after class yesterday. Hopefully you got the answers that you were looking for. But he says, should I fund 4 accounts with Apex to qualify, or should I just do one? Guys, I'm going to talk about this real quick. Apex is amazing. Apex, Elite, Top Step, whatever. They all give you the opportunity to test your plan, to see how you react under pressure, to see what you're going to do when live money is on the line. And all of these proprietary firms, what they do is if you pass their test, they're going to fund you. You can trade their money. And then they do like first 25 grand Apex is yours, and then 90% after that. But what this is an opportunity for you to say, you know what, on simulator, I was winning more than I was losing. Everything was good. I'm consistent. It's time to try it in the real world. And what most people find is that they pucker a little bit when they get to the real world. And maybe they break their rules a little bit after the first day of success or something like that. So it's so important that you remember that your qualification with them is just a test. That's all it is. It's seeing how you react, how your trading plan holds up under pressure, how you hold up under pressure. So it is my personal opinion and not necessarily the opinion of Nexgen, because I don't speak for them on this one. Um, if you can't qualify one, why pay for four, right? When we first started all this, I had clients that were funding 20 accounts at $50 a pop, right? $1,000, and they were using trade multipliers or trade copiers. So they were taking one trade on one account, spreading it over 20 accounts, and blowing out 15 Apex accounts a month. And these guys were spending $3,000 or $4,000 because they had to have that 20 account. They had to have the ego boost. Well, I made $20,000 today. Well, you didn't. You blew out $5,000 worth of Apex. So I think if you can't do it on one, why try it on 10, right? Just do it on one, guys. It's a marathon. It's a marathon. It's not a sprint. Take your time. And then you do not have to pay for an extra feed. Apex will give you everything you need if you're doing Apex. So Joel got us going this morning. Joel says termination, full reversal, odds favorable. Because of the termination that creates the full reversal, he is willing to forego one divergence. Beautiful entry, Joel. Absolutely perfect. At 2:48 in the morning. using that market replay. And then once again, clear path, odds favorable, everything says down. You take it on the third divergence, and that's the only kind of red flag there is three divergences is a termination condition. Because of the momentum, because of everything going down, you made the choice to take it anyway. As you grow with the software, guys, you'll learn when it's okay to deviate just a little bit. What do they say? Learn your rules like a scholar so that you can break them like an artist. Your experience will have you. Well, it's not a clear path, but everything else is perfect. I'm going to take this trade and I'm going to manage it assertively at my trouble spot. Joel, beautiful trading. Way to use market replay the way it's meant to be used, going back and testing your methodology. And then Cav. Strong triggers wide to the downside, took the pullback right to resistance inside of favorable large triggers, and you got out right before the divergence in the one-to-ones. Absolutely perfect. Rules met on the large chart, perfect entry on the small chart, quick profits because it's not a high probability trade, it's a medium probability trade. Cav, outstanding trading there. You guys, I want to remind you that you can ask questions on other people's charts. It's absolutely no problem. Um, Just remember, Cavs trades may not be your trades, right? My trades may not be Cavs trades. It's all right. I want to look at everything that you're doing. And then E. Webster, just challenges on this one, and it's okay. But I'm going to start with a large chart read. Large chart says down, so that's a good thing, right? We can identify that instantly. Large chart says down. But I don't have momentum on the large chart. Rule number one not met. Nor do I have a clear path on the large chart. Rule number two is not met. Guys, give me a Y in the room if you see it. I'm going to tell you right now, it's a huge level of bravery to be able to post a mistake in the room, to be able to post maybe a challenge in the room. But guys, this is how you grow. So without momentum and a clear path, this area inside of favorable large triggers is less likely to work, and this is a pretty common idea of letting the small chart lead the way rather than the large chart. Rules not met, no reason to even look. Does that make sense? And I use the phrase, maybe this will help some of you guys, is this my best look for a short trade? Because it's really not. Because I'm losing two of the advantages, the two most important advantages there. And then if the short doesn't work, let me break rules to the upside. And it's the exact same thing, guys. I don't have momentum, nor do I have a clear path. So that area, not even inside of favorable large triggers, is much less likely to hold. And just committing to that adherence, guys, let the large chart lead the way. Let the large chart say that it's time. Let the large chart tell you the direction. Let the large chart tell you the momentum. I promise you, it will eliminate such a huge chunk of potential mistakes. And then Cav, how big is your monitor? Large chart says up, small triggers above the large. With the one-to-ones, you decide to take the trade to the upside, reached your first goal, should have gotten out, waited, and hoped the market would keep going. Should have taken the money at divergence. And let's see what the large chart looks like. Very much right into the termination condition, right? It's a 50-50. The smalls made it, but it's not the best momentum. Larges hadn't made it yet, so you're taking a medium probability shot. And great patience. I love the way you didn't just hop in, you waited for things to start to roll. And then, man, that was your target. And you know what, Cav, if I may, taking the majority of your position off at the problem, I love it. That's intelligent, right? Let's get paid. And man, if you're going to leave one at break even just to see if it goes, that's the way to do it. You've got no risk on the trade, right? You're playing with their money at this point. You've already been guaranteed $600 there. Is it worth it to give up $20, $30 in commissions in case this market screams all the way to the next level? My humble opinion is hell yeah. The majority comes off, gets in the bank, gets paid. They can't take that from you. That's what runners are for. Get a little loose with it, right? Take some chances. Go with that direction. Go with that establishing momentum. Hope that area breaks with zero risk on the trade. I think that's a brilliant plan. And it's easy to say should have taken the money with the divergence. And I agree, two divergences on a 50-50 is a great reason to take the money. But with everything green and everything going up, um, behind this pivot, you're still break even, you're still below support, and you still have a fighting chance if it decides to go up. I hope that makes sense. But taking the majority of the position off at the trouble, brilliant. Never a bad idea to get paid. And then Cav again. And Cav, I ask, and this is just for my own little self here. Do you suppose that's enough information? And I know that it's two charts on 32. Um, it would be easier if you push this back over. We could get a bigger, clearer picture. You don't have to, right? But you don't need this 8 inches of gray. Slide it over. Hit that arrow. Patow. And you can get more into a smaller picture. And I don't mind clicking on yours, but we can't see both at the same time because it is so big. Market on large chart shows strong triggers. It does. Small's below the large, larger wide. You've got a 50-50 look coming from a bad top. Um, your long didn't work. I'm not sure what happened there. And then when everything is rolling and the triggers start coming down, I like this because you're anticipating it to hold, right? And you were probably anticipating it for a while. So you let your small chart roll, you let the large triggers roll, you let the small get below, you get a couple divergences, three divergences above the fibs, and you're just super patient. I love this trade. And you take it all the way down to the trouble spot. Cav, this is like some really crazy heads up, great chart reading, beautiful taking advantage. And then again, you take three off at potential trouble. I almost would have added a couple of them back on right there at the one-to-ones into the next one. Great trade, dude. I like this one. I hope so. I try to get you guys on the right side of things. I got to tell you, the next gen students are some of the most amazing students in the world. The things that you guys, just watching you grow, is so much fun for me. It really is. Then let's see. Cab, we've got, I think this is the same one. Yep, that was the same one. But this one is a different one. That's about as easy as it gets, isn't it? Odds favorable, clear path. Guys, look at that entry. Absolutely outstanding. Like a sniper right at the area inside of favorable large triggers. And then could have got paid at the trouble spot. You exited early due to termination conditions. I like that. You got into it, right? And instead of taking profits there, you gave it a little bit of a chance to break. Um, and again, I have on a four lot, three off at the fib, and then I'll let a reversal bar from the fib take me out. Just things to think about on management. But that great entry made it easy to get paid. Great entries create manageable trades, guys. It is such a fact. And Cav, you're showing some of the best entries today. Absolutely beautiful entries. Um, and then this one, weak triggers, everything's still above. Three divergences, one-to-ones. So you're saying with three divergences and one-to-ones, you're not worried about support. And I think maybe, Cav, a little early on this one. because you don't have a termination condition here. You do have the three divergences, but if you let things roll a little bit, and you started to, but let it clear, right? This entry here is almost the exact same entry over here, and it's a lot less stress. It's a lot less stress when you start getting to the business side of things rather than the trouble side of them. Trading from areas instead of to areas. I think it takes a little bit of the stress out of it. And then Miss Debbie, this is just a continuation trade. So this is everything is up off of support, everything rolls, the momentum starts cranking. You let it roll and you take your first entry is a little premature. And then you got stopped out right at your best entry, but good job getting back in and then taking it right to Profit Town there. And Miss Debbie, I know that you had reasons on this one. But one of the key concepts is let it get that momentum, let it establish that momentum, and these little quick hits work better when the trigger lines are really, really strong over here. But great job keeping your head in the game, realizing that you shouldn't exit at support inside of favorable large triggers. You should be interesting, or you should be going. And Paul, he has stuff that you don't see. Always remember that. John has things that you're not looking at. All right, Ron C. Odds favorable, clear path. Odds favorable, get in, get out, get paid. Guys, this is how you turn chart reading, how you turn momentum and a clear path into a very profitable approach. Ron, really nicely done. Let the areas break, right? Let it be a clear path. And just take advantage of the momentum. Absolutely beautiful. And then Cav, very similar. Trading into the area rarely works as well as trading from the area, right? That little calm, that little weight, that man, there's one-to-ones right there. They're probably going to create a bounce. Does that make sense, Cav? And then one-to-ones with divergence sometimes creates an even bigger bounce. And it's the difference between letting it break and pull back and trading into it. And it's just, oh, that's your one little refinement. It's going to take all the stress out. Get it here, you've got less risk and you make more money. Great trading, though. Can't stress that enough. Let's see where I'm at, Ron. Cav. Guys, one of the reasons Cav trades so well, have you seen how many charts he's posted in the room? Have you seen how many times Cav gets feedback in a day? Pretty outstanding. I love this. Weak triggers at support. Smalls break below the large. Large roll below. Um, in at the mid band, it gives you a better shot of managing out at the one-to-ones. So once again, a little jumpy on your entries, waiting for the pullback to the mid band, right? You're on the wrong side of smalls, and this is on the NASDAQ. And it's definitely not perfect over here yet. So at least give yourself the advantage of a pullback. See how your synthetics are still up and above everything? And it closes the gap right to the synthetics before it really starts to move down. Um, these are the ones, if it's not a perfect termination, if it's not the best look, if my trigger lines are above the area, that is, for me, it's a huge, let me be a little more patient. If it was resistance to the tick, Cav, I think this is a better opportunity. Nicely done, man. And then who's this John Novak fella? Did he buy software? Odds favorable from a termination. Everything says down. The momentum is the absolute strongest. We hadn't reached fibs. Three divergences says, well, it might push higher. John lets it push higher. There's that close on the correct side of those really strong smalls, taking them down to Profitville. Nice trade, John. And you probably would have managed out with 3 and potentially re-entered. And then Haji asks, sorry, I just saw this, Haji. Can I talk about the rule that says small triggers outside of the large for 50-50 trades? Haji, are you with me in here? Cool. So let's talk about it. I'm assuming you're referring to the KISS plan, right? So let's talk about what everything means then. 50-50 for the brand new, for the highest probability, one area not broken, 2 areas right on top of each other, I might be okay. But if there's huge gaps between the areas, guys, if you have a 6-point range that you're trying to break, it's less likely to break. So one area not broken. The first one is odds favorable momentum is an absolute must, right? So your large chart, Haji, 100% without question, you have to have screaming triggers because screaming triggers break areas. Weak triggers end up creating these ugly little fluctuations. Does that make sense? So that's the first one, is make sure that you've got the best of the best momentum. And then since it's not going to be perfect, make sure you have the best of the best momentum on the small chart too, right? So if I'm going to take a trade without a clear path, I'm going to make sure that my small chart has absolutely smoking trigger lines too, that the momentum on both charts is like 100% solid, guys. And this is huge because weak triggers don't break things. Strong triggers break things. And that's really the key to it. And the question was about the small triggers outside for 50-50 trades. Dude, Haji, let it be the best of the best, man. Let it be the absolute strongest momentum that you could ever hope for. Because the reality is that you don't have a clear path, right? You don't have nothing between you and your target. There's an area that may stop it, that may create a bounce. There's an area that may ruin your day, and the stronger the triggers, the better your chances. Which is why when I look at medium probability trades, if my clear path is missing, my momentum had better be spot on. It better be the best of the best, right? Because I don't have a clear path. In my entry area, it better be tight. It better be very concise, very low risk. I'm not putting a full risk trade on for hoping that the path clears, right? I want my risk to be as manageable as possible as I get into a medium probability trade because they're not as likely to win as much as a high probability trend trade. So insisting 100% on the momentum is huge. Insisting on no divergence. Because what is divergence, Haji? And this is the second part of strong triggers, is if divergence prints, that's visually telling you, hey man, we're losing momentum. And momentum is the one thing that I don't want to be without. And you're right, D-Rock, best of the best creates easily managed trades and no stress. I used to say best of the best, like I was getting paid every time I said it. Um, but think of it in terms. So here's a 50-50, right? Small's below the large are wide. They're cranking. The momentum is the best. Small's outside of the large. The momentum is the best. No divergence. The momentum is still the best. And then a tiny little window of opportunity. There is one line where this market is most likely to continue. My money is worth the perfect entry when the path isn't clear. My money is worth the best momentum look when the path isn't clear. And think about that. Be stingy with your money. Awesome. Great question. Thank you for that. Keep those great questions coming, guys. And then John Novak missed his pull. Oh, he got it. Got his pullback. Took it off at fibs. So when 3 divergences push it higher, he let his small triggers tell him that it was time to look. And it's just a continuation of a failed trend trade. And he takes it off at the target. John, nice job. Easier to see here. And guys, this is just chart reading. And I want to talk about this because this is amazing. So this was his trade, right? And this is real important. It was odds favorable, clear path, everything was great. That was his trade. That's where the rules said, where his rules say, man, I got to take this short. That's it. And it's also where his rules say three divergences says that I need to jump ship. I need to get out of this one. I have to manage out. I'm not going to sit and hope. And then here is what happens when you start reading the charts and you start really creating this awareness and pattern recognition. And this is the key to this trade is the large chart never changed. The large chart still led the way. The large chart still said we were going down. The large chart still said the path was clear. What John does is he goes 30 divergences can end it, it can push it higher. The reality is I don't know what it's going to do. And it pushes all the way up to Fibonacci resistance. So the idea on the continuation trade is that when your small triggers roll in the direction of the trade, when everything starts to point in the same direction as the large chart, the market loves to create these little snapbacks right to the small triggers. And if you have an area to support it, it creates a beautiful trade. It creates an opportunity to continue down to the target. And this is nothing more than a continuation of a failed trend trade is the easiest way to put it. And you'll see this happen a lot. And this is very much kind of that next level for you guys. If the first one gets a third divergence and doesn't work, but nothing ever changes on the large chart, a lot of times there's an opportunity to continue with the trade. But the key is that the large chart says go. Lower divergence pushes it lower. Maybe you managed out. Maybe everything wasn't okay. Large chart still says up. There's your little snapback right to the small triggers, right to the large triggers. Guys, this is very much going to be a part of your plan as you grow with the software. I took a loser on the trend trade that didn't work. I waited for the turnaround and the snapback, and we finished the move right up to fibs, guys. It's the exact same trade going the other direction. And what is easy for John Novak to catch right now, what is simple for me to see, will be easy and for you to see with repetition. And then just early entries getting you today, Cav. Trading from the wrong side of the fib, trading into it rather than from it. Um, and then Cav, a cool little thing to see here is there is that divergence low that hadn't been broken yet. So this is technically a pivot stop out right at a fib. The triggers aren't the best. They're not horrible. And then on the NASDAQ, these pink one-to-ones can catch a little bit of overrun, and that's what got you there. And then great heads up. You get it all back because when the 50-50 doesn't work, a lot of times there's an apology. And I love how you let it roll and you wait for the pullback, and it gives you the opportunity to make some cash on the way up. Great recovery, Kev. There was a time in my life where I used to road race motorcycles, and the experts, the pros would always tell you the difference between an amateur or a novice and a pro has nothing to do with ability. It's your ability to react, to correct from mistakes, to recover from mistakes. And Cab just showed a beautiful example of that. All right, D-Rock, let's see what you got. All triggers up. You're saying the triggers are rolling. They're still inside. It's right in the termination condition. No triggers through. Termination. You took the HVA trade. D-Rock, it's early. So one of the rules for the HVA trade, and let's go to those rules. And I know that this is something that you're working on now, so let's see if we can give you just a little bit of help on it. And this is going to change. It requires a little bit of patience. The top or bottom, you had it. It was good. It was a good top or bottom. And I love that. That's rule number one. That's the most important thing. Rule number two says don't trade them into termination conditions. That's huge too. You respected that one as well. Um, what you really want to do though is your entry, you want those triggers to roll and you want your HVA line to be lined up with either small triggers strong and down or large triggers already down. And this HVA line is cool, but with odds favorable momentum to the upside, with everything still kind of pointing up, it's aggressive. It's an aggressive entry because you don't have the information yet. Your small triggers are just starting to roll, but they're still above the large. And you got lucky that this one did want to hold, right? Yeah, it's just a little bit early. Um, and a more conservative one would be to let those smalls get below and take a little stab back, right? Maybe something like that. Um, it was a great read. The execution was a little early, and I love that you got paid on it. But this look is going to work less often than it doesn't because everything is still screaming up. Everything is still just full tilt boogie to the upside. And more often than not, it looks more like this. You start planning and you're thinking and you're hoping and you're wanting, right? But everything still says up. If you just let it roll, the prices are almost identical. We saw that yesterday too. We had a great lesson yesterday where the same thing happened. Very often it pulls back and it gives you that opportunity, but it gives you that opportunity at the HVA where the trigger lines are supporting it. And that's really where the success comes on the HVA line because um, I'm looking to see if there was another one in that mix, and there doesn't seem to be. Um, but that's a big part of the HVA rules is when you talk about the entry, it literally says, looking for the T3 market flow HVA line that is positioned inside the smaller chart, smaller large triggers. And of course, we want them inside either. So just the smalls is a little more aggressive, but when the large roll, it's freaking money more often than not. Um, and then it's just that little bit of patience, that little bit of patience, because everything is up. And at the time of your entry, everything is up. And at the time of your entry, your large and your synthetic are still up. Like it was a great read. It was an anticipation. Um, how did you know where to put your stop? What were you behind? Because the only one that makes sense is behind this pivot, right? And that's way off in the distance. So, stuff to think about. I like it. I'm glad you got paid. I'm always glad when you guys get paid. See, but 10 ticks is just an arbitrary number, isn't it? Okay. And then let's see what we did. Nice reversal bar. And again, everything says up. So, and then here's a great example, right? Your HVA is at all the triggers up. Everything still says up. And even though there's divergences, all your charts say up. So one of the things on market flow is that HVA gave you a little bit of a bounce, right? And lets you capture quick profits. Can you see how you're fighting so much? Um, and I want you to think about this a little bit. If this chart is up and all your triggers are up, and this chart has been going up forever and all your triggers are up, and your synthetics are up, doesn't it stand to reason that maybe down isn't the best, right? And that's where letting those triggers roll will at least keep you on the right side of things. So I'm glad that you shared this one as well, um, because it's the difference between hoping the red line holds and the red line actually holding, right? It's the difference between wanting it to be a termination condition that reverses the market and hoping that that one silly little pink line stops the entire market for you. So great lessons there, D-Rock. You got to, and this is one of the byproducts and one of the burdens of being a good chart reader. is you begin to anticipate a little bit. You start going, oh, here comes my trade, and you take what you assume is your trade. I did it yesterday. I took a trade 3 times because I got in a little bit early and I got stopped out. And then I got in a little bit early and I got stopped out. And then when I finally just waited for it to go where it should have gone and waited for a signal, I made all my money back, but I didn't make any on top of it, right? You can almost always, if you fight like this, it's luck. And I don't mind saying that. It's luck. If everything says up and you win going short, you got lucky. And lucky feels good sometimes. C-Dub, you said this was a winner. What'd you do? Didn't make it to triggers, but hit mid-band 1-to-1s. What'd you do? Why'd you do it? Where'd you do it from? Absolutely, D-Rock. I see a circle. What made you get in at 1-to-1s floating in the middle of nowhere? Away from the triggers, right? That's okay. Taking pictures doesn't mean anything though, right? Watch this. So watch this. I'm just going to show you a little something, and maybe this makes sense. Maybe it doesn't. I suck at analogies. It's a Novak thing. So right here, I have a picture of an algebraic expression. You want to know the truth, guys? I got no idea what this means. I don't have any idea what all this nonsense is, and I can't do anything with it. But if I take a picture, and we'll get rid of this, boom, boom, boom. If I take a picture, and I don't just say I got the right answer, show your work. You say this was a winner, C-Dub, but why was it a winner? What were the advantages? What were the disadvantages? What made you think that that 1-to-1 was the right course of action? Does that make sense? I can go back and take pictures of winners all day long. I can say something clever like, I got in right here, and I took profits right here, and I am the most kick-ass trader in the world. But if I don't know why I did it, maybe I tried the same move into support that didn't work. Maybe I tried the same move into resistance that didn't work. Maybe I had the advantage of momentum. Maybe I didn't. And what you'll find, C-Dub, is taking pictures of winners is awesome. But you have to understand what was going in. What were the driving forces? No, not at all. I'm looking at the NASDAQ from a bad top into 1-to-1s with the large triggers forever away. None of the triggers are even near. My thought is that they correct and they come back to these triggers where I don't have any areas. And the reality is this is a great opportunity in a market that's been screaming up to continue up from 65 and maybe hit the next fib. So it's not obvious to me at all. If it's obvious to you, outstanding. But I can't for the life of me find a trade here. Not anything that suggests I have an overwhelming advantage. Does that make sense? And I'm not knocking it. This might be your trade. But without a fib right here, I'm less inclined to take this trade. With these large triggers so far away, I'm less inclined to take this trade. With these large triggers way up here, I'm less inclined to take this trade. I hope that makes sense. So take all the pictures, right? But talk about why. Talk about why you took the trade, right? Took the pullback into the large triggers at mid-band, never broke below the blue fib. Why did you do it? You did it because the small triggers were going up, because the large triggers, everything was above the area. You waited for the pullback, you knew where your stop should be, and you took quick profits at the trouble spot. This is repeatable, right? And again, Cav, you are early entries today, all day long. That's your thing today. And then who was this? This was Josh. Josh says odds favorable momentum, a very repeatable condition. Two divergences doesn't kill a nice looking trade. You entered at the midband inside of favorable arch triggers. You knew where your stop should go because of rule number 3. And why did you get out early? You made your first target. So, Josh, here's where the money happens. Okay, baby was crying is good. Do you refer to yourself as baby or was it an actual baby? Ah, 4 months. I remember those days. I remember those days. Yeah, that'll pull you out of a trade quick. Good job getting out of the trade and not trying to hope. Um, but you understand that with this momentum, with everything going down, everything screaming, even your small triggers turning down, that's a hold for the fib kind of scenario, right? She would have. But you would have exited right here and taken your money and high-fived yourself and been cool with it. And then you just would have waited for the next one. Doc Baby's pocket money for that. Amen, Collie. Baby's pocket money never ends, guys. Just warning for you youngins. All right, Paul. Tail end of momentum, right? Not the best, but still good. Two divergences says, hey, things are starting to suck. We're back at the large triggers. Things are looking ugly. Reversal bar with divergence from outside of the outer band. You couldn't pay me to take that trade. Paul, a lot of great information. I hope you're still in here. I'm looking. I got a pretty good C here. So let's talk about a few different things on this trade, guys. First, let's do it 2 charts. And I hope this is helpful. It's momentum, without a doubt. Man, I don't know that I would call this odds favorable. I don't know that I would say this is my best look. Because if I go back to the idea of what odds favorable momentum is, it's this huge separation between the two, right? It's that giant gap between the small and large. This is the best of the best. And as the small triggers get closer and closer, well, I know that my large sharp momentum is waning. I hope that makes sense to everybody. That's the best. The closer they get, the lower the momentum. And then when we come back and they're kind of straddling, I know that it's not the absolute best look. And this is where the small chart, two divergences, becomes a pretty big red flag. Large chart is slowing, faster chart is showing you that slowdown even more visually. Not a trade killer, guys. This isn't a reason to not look for a trade. It just means that you got to be on your toes a little bit. Without the advantage of that great momentum, um, I like an area. And the one thing that I notice is that my areas are on the other side of the correction point here. My areas are outside of that window of opportunity. There's no areas inside of those triggers. They're all below the triggers, which means that I don't really know. Is it going to bounce from here? Is it going to bounce from here? Is it going to bounce over here? Hell, I have absolutely no idea. What I do know is that my momentum isn't rock star, so it has the potential to push lower. Does that make sense? Paul, you may be in a trade doing something. Guys, if my chart isn't perfect and my areas are beyond the triggers, I am a sit on my hands kind of guy. And the flip side of that is if my trigger lines look like this and my path is clear, but my area is a little bit outside of triggers, that's when I'm willing to break my rules. I'm not willing to forfeit the entry area along with momentum. I hope that made sense. Lyle, it is a volume-based chart. A market flow chart is a chart that shows you the volume intra-bar. It's 8 range, so what it is if it goes 8 up, 8 down, it creates a new bar. It is when you are super comfortable with your rules, when you're really comfortable with the trades that you're taking on 2 charts, you can incorporate this chart a little bit to give you just a little bit of help, maybe confirmation if you needed it. Um, what this particular chart said here, and again, Paul, I don't know if you're even listening, so hopefully somebody gets something out of this. One of the things that the range chart does for you is it creates a range. This is an outer band. This is a mid band, and down below there is another outer band. So it operates in a range. And when price extends beyond that outer band, it's kind of an exhausted market, and you see it by the losing of momentum on the large chart. And you also, if you get a divergence, if you get market flow signals from beyond that outer band, guys, it's a sit on your hands and wait. It's a wait a second because stuff really isn't that good anymore. And very often it corrects. I love the market flow chart, guys. I use it every day, and it's a big part of what I do. Um, and then and it helps you with 50/50s, right? And for me, I use it to confirm momentum. So if I've got the strongest momentum over here, maybe I take another shot at something, right? But if it's not the best momentum, if I'm exhausted, if this isn't the best momentum, it's a great opportunity to sit on my hands and wait for things to really be perfect. And I'm not saying or suggesting that Paul did this, but if you've been waiting a while and it's just not setting up the way you want it to, you're more inclined to take a little less than perfect sometimes. And then got stopped out here with no clear path, waited for reversal bar, got again, and got paid. So let me see if I've got this right. Let me try and line things up here. You're making me work, C-Dub. At 10:49, 10:49. So we're over here, right? So this is an awesome lesson, and I wish I could see more of the bottom of your chart. This is the idea, C-Dub. This is the top of your triggers, the large triggers. Do you see where your synthetics are way down below? And there's that big gap between the two? I like this look. I really do. That's a bad top. That's a mid band that holds. That's everything rolling. C-Dub, this one is pretty. And what got you on this one was the idea of split triggers. So you did have an area right here, without a doubt. Hey, Josh, take care, man. You had a great, I like it. C-Dub, I would support this one all day long. But what got you on this one were those split triggers. And what happens with split triggers um, is remember that we said price likes to correct to those triggers, right, C-Dub? So you get in, you're not at an area, right? And oh, this is perfect. Thank you for this. When you have these split triggers, you got a 50-50 shot, right? It's a 50-50 shot of whether it goes from the top or the bottom, and that's okay. Um, Getting in at 54.50 instead of 55.50 gets you in right at the area, which is awesome. And that's helpful, especially on a 50-50 with divergence against it. All the market wanted to do, man, is it wanted to correct back to those synthetics. Um, and you got caught right in the middle of it. Does that make sense? And I've got a picture from forever ago of the exact same thing happening, getting caught right in the middle. So when they're split, the idea of waiting for a reversal bar, let it start going in the direction, you freaking nailed it. And then you were able to come up and take some money. And then that second divergence on the 50-50 says, dude, it's probably going to push lower. I like the look. I like the get in. It wasn't a clear path. And if you're not going to have a clear path, you did have the momentum. A little bit of patience with those split triggers keeps you out of this one and gets you in at the exact same price to see if it's going to go up with all that momentum. And then divergence lets you manage out. So let's look at both pictures, Collie. Um, and let's start with favorable large triggers. Favorable large triggers, yeah, means that large and synthetic are right on top of each other, right? So the only place that you can have a bounce point is inside of those triggers. The tighter they are, the easier it is to gauge that bounce point, the easier your window of opportunity. When they're split like they were here, the large and the synthetic have broken apart. Um, Man, you just don't know. You don't know which one it's going to go to. So one of the talks we had yesterday, which was pretty cool, is that if they are split like this and you're just not sure, wait for a little confirmation. Get to the right side of the small triggers. Wait for the reversal bar, something like that, just in case, because very often the market loves to come back and see how it closed it right to those synthetics, but the momentum kept it going up. C-Dub, that was an awesome picture. Thank you. That was a good lesson. And wow, we made it through pictures, guys. That's all of them. Let's go see what the live market is doing. So this is the S&P. Let's start. Background's green. I'm going to go through my whole process. The background is green, so I know I'm only looking for rules to be met for high probability trend trades long. Well, now it's red, so I'm only looking for rules to be met for high probability trend trades short. That's how quickly it can happen. Notice that my larger up, my smaller down. I do not have odds favorable momentum. Well, I do now. That was pretty quick. You think termination conditions are where decisions are made? I have a termination that just created a full reversal that gave me odds favorable momentum. Where's my area inside of favorable large triggers? The only one that I have is a midband. Right inside of favorable, right inside of large, right inside of synthetics. But I'm not through this divergence low yet, so it's not high probability. And then C-Dub, this goes back to your first picture, right? Notice how the termination creates the full reversal. There's some one-to-ones. That might be a good entry like the one that you took. But do you see how the conditions are a little bit different? See how the termination creates the full reversal? The momentum is the best. The large triggers are pretty close. And you may get a little bounce off of it. And we'll see what happens. It may come back and get us. It may not. But that was your read, guys. And it happened inside of 1 minute. Does that make sense to everybody? And then C-Dub, that just goes back to your other picture. This termination that created the reversal, that level of momentum, makes me feel better about something like this if I'm going to take a shot at it. But it's just a momentum-based trade. And if that momentum dies out at any point, I'm going to exit the trade. And sure enough, there's when these trades become. I don't think so. Lyle, there doesn't have to be news for violence in the market. All it takes is someone with deep pockets. All it takes is somebody with deep pockets to move it. And the cool thing is when this happened, right here, you guys started the process of saying, this could be a big old reaction. That's a termination. It may stop the market. And then once this happened, the reversal, and that odds favorable momentum, you said even more. This termination condition was pretty good. That's a strong top. With all this momentum, I'm going to look for an entry. But notice that it took the momentum straight to the one-to-ones, and I don't have any trigger lines breaking through. So if you take an entry, you take an entry into an area that has the potential to stop the market. Let's see how it reacts. Some people will get in at resistance inside of favorable large triggers. Some people will respect the one-to-ones. You got filled, C-Dub? Lyle, you were long. Tell me why. Show me a picture. Tell me where. I don't see any reasons to be long at 59.25 at first glance. Show me your picture. Show me what you did, man. By not showing me your pictures, guys, you are forfeiting the biggest advantage you have in your education. The advantage of feedback. I can't force you to do it. I can't make you show me your trades. I can't make you explain your trades. I can't do any of that. But if you do, man, what a great talk we get to have. Okay. Where were you long? So you got long into three divergences on a 50-50, hoping that it went up. I see one, two, three divergences from the top. And now at the bottom, I've got two divergences, but I've also got a potential termination. I don't know what's going to happen here, right? So if you took that 72 short, this was your problem spot, and this said that your momentum was over, and then you had to make a decision whether or not you wanted to take a shot for the short. That's up to you. That's all on you. And Lyle, I'm not suggesting that you took a bad trade. I'm just saying that I can't particularly find it by looking at my charts. Crude oil hit Fibonacci resistance to the tick. Not one trigger broke through, but back here, that looks like a potential. Can I help you? Do you have your capture software up? Dude, I'd love to help you right now. That's what we do in this room. Sergio, show a picture. What are you talking about? I don't know what CL trade 80 cent means. Okay, Paul, do you have a second? Are you here? Not really odds favorable, right? When the smalls return to the large, even if they're still outside, it's not odds favorable. Odds favorable is that big gap between the two. So that was the first thing. I even pulled up this picture for you. That's your best look, right? And the closer they get back, the more momentum is being lost. You cool with that? Tail into momentum. What does two divergences tell you about that tail end of momentum? It's confirming that you're losing that up push, right? So not only is the large chart at the tail end, the small chart says, dude, Paul, we're kind of getting tired. Here we go. And that's okay, right? This can still be an awesome look to take continuation long. You've got the clear path. And then you notice that your areas are outside. They're on the wrong side of the correction zone, Paul. The correction happens inside of your triggers. The correction comes back to the moving average and we give it a place to bounce off of. That's where the great stuff happens. So when you start getting behind, who knows where it's going to continue from or if it even will. You're beyond the correction zone. You're hoping that this little green line in the middle of nowhere stops all of this loss of momentum. And then the second half of that I talked about, because I understand you're trading a little bit and I know what you're looking for. When I feel a little more comfortable with my areas outside, this is my look. I'm not giving up the screaminess to the top side momentum if I'm going to take a mid band or something outside. And we see that a lot, right? In a really strong trend, super, super strong triggers, mid bands a little bit outside, things look good. Um, you gave up momentum and you gave up the entry area, which means that you were 2/3 of the way to taking that loss. Does that make sense, Paul? And then the other thing I said, and I said, I don't know if this was you or not, when you're sitting through all this nonsense and you don't get a trade, you're more apt to take this trade. Lyle, awesome. 625 is a beautiful day, even with errors in judgment, without a doubt. And then pictures, Lyle, do you have a second? Let's do it. Let's use that capture software, guys. And then Sergio, that's awesome. Where did you get in? Looks like you got it. Nice. So Sergio, watch this one too. This will help you. So first things first, are you up, Lyle? Do you have your capture software up? And Sergio, I know you're still learning the ropes here, so I'm going to help you out with this right now, along with Lyle and anyone else that needs help with pictures, guys. This is a great lesson. Yeah, no worries. So I'm going to click capture, and that's going to set the tone, right? I'm going to go ahead and capture a picture. So if I hover over just one chart, it's going to show me one chart. If I click and drag in the upper left-hand corner on my large chart, and I drag it down to the bottom right-hand corner of my small chart and release, it's going to get me a picture of both charts. So I click capture an image, and this is where the magic happens, guys. This is my image preview, and this shows me the large chart. It shows me the small chart. Whoops. It shows me everything that I need to talk about on my trade. No, not necessarily. You just have to click and drag, Sergio, so you've got to go from one side to the other. Debbie, thank you so much. I take pictures all the time, Sergio, even in between monitors. So I'll use my Snagit since capture's up, but I can literally take 3 monitors worth, right? And of course, they come up really small. So the idea is if you have 2 charts on one monitor, just from the top left to the bottom right, it'll capture everything. And then once you capture it, guys, this is where the most important stuff happens. So everything is click and drag. All these tools are click and drag. So with an arrow, if I'm pointing to my potential entry, I left click and I drag. I can do a short arrow, a long arrow, and I can put it right at that point of entry, right? Same thing with the square. I can put a box right around it. I can put a box right around it. So now you can see where I entered. And then the call out button is the key. It's again, click and drag. It'll create a little dialog box here. And this is where you're going to tell me why. So you're going to tell me why. This is why I did what I did, Mark. And then you're going to show me why. Because I had odds favorable momentum. Because I had a clear path. And this is where, and guys, I encourage this in new users. Use the language if you're taking high probability trend trades. I entered at an area inside of favorable large triggers. And if you do this every time, you're training your brain to wait for the pullback. You're training your brain to wait for the best of the best. So you put all this information on there and then just click copy. Your capture is ready to be pasted. So I'm going to come over to the room and I'm going to paste it into the room. And then the other thing is if I click upload, let me continue editing. If I click upload, it's going to provide me that screencast link. And if I copy it onto my clipboard, I can put the link in the room as well. And then the second half of that is I can take that link, and if it was one of my high probability trend trades, I can drop that link right into my spreadsheet, and I can come back and I can study it tomorrow and make sure that I'm doing the things that I need to do. And then once I hit close, I'm all good. So there's your little demonstration on it. And then, of course, I want you guys to be able to do it. So practice over the weekend, but here's the link to the screen capture where you guys can go through and practice it again. I hope that was helpful, Lyle. If you need help, let me know. And then, Sergio, do I always set 2 stops to take profit on the ATM? It depends. If I'm trading 2 contracts, Sergio, my stop placement is actually only 1 stop. So what I'll do, let me pull up a little ATM strategy here for you. So what I'll do is if I'm trading 2 contracts, and I'm going to customize it so it allows me to, I'll have 2 separate targets. And then Lyle, if you come back Monday and need some help, let me know. And what I'll do, Sergio, is I'll put 1 contract on each target, if that makes sense. My stop loss, if I'm trading crude oil, is 12 ticks no matter what. And 12 ticks is not where I'm putting my stop. Sergio, do you remember the lesson that stops go where the market shouldn't, right? So 12 ticks gives me reaction time. It gives me time to move that stop where the market shouldn't go. If I'm being conservative, if I'm trading that KISS plan on crude oil, my first target is 10 ticks. And what that's going to do is that's going to pull a contract off at 10 ticks. And my second target's at $200, 20 ticks. So when I do this, what I've done is I've set up a 12 to stop loss. First target's 10, second target's 20, and then I can right click and I can save it. And then I can come down and I can grab it, that two lot like this. So if that's my thing, and just, I'm not saying this is a trade, guys, but if I have that strategy in place and I go long, my stop is in place, my targets are in place. If I need to move a stop, I click it and I move it. If my first target is hit my first target for me, and it's going to go against me because I'm into a term. If my first target is hit, my second target remains, right? And let's say that I'm getting better at trading. Let's say that I'm starting to recognize advantages more and I want to hold for bigger moves. Maybe I move a target over here a little further out, or maybe I recognize that I don't have advantage and it's a termination condition and I just want to take quick profits. I can move these around the same way I can move my stop to where the market shouldn't go. Sometimes it might be 12 ticks, sometimes it might be 8 ticks. And I'll move my targets according to where I want to exit. And as you grow with the software, $100 may not be your first target anymore. You may be looking for 200, 300, 400, depending on what the market is telling you. And then C-Dub, you called this one no clear path. Directly into one-to-ones, no triggers break. Absolutely. C-Dub, do you see how the large chart said you didn't have a clear path? You took it anyway. And that's okay. I'm not mad at you for it. But you could have gotten paid at that giant roadblock, right? You could have been in at 50 and out at, what is that, 47? That's 3 points to trouble. No reason to take a loss on that one. And as you develop the ability to read charts a little more, you'll be able to manage those a little more aggressively. John Novak, again, taking the idea, momentum can screw things up, let it do what it's going to do, and then take the little snapback, and then get out at potential trouble. John, nice job. Quick little hit. Doesn't fit high probability trend trade rules, but it's a hell of a chart read, isn't it? Weak triggers on the 34.5, so he took the money at the yellow one-to-ones. Never hurts. Who cares what happens next after you win? Amen. The goal is to get paid, isn't it? That's all it is. The goal is to get paid. No reason not to get paid, especially when you don't have advantages. Nicely done, John Novak. That's it. $72,000 a year. So let's go through the whole rules, right? I mean, I know that the rules aren't met, but absolutely. See how they're starting to line up a little bit, D-Rock? Get them to the right side. Get them to the correct side of those large triggers. And if these small triggers were at your HVA line and you didn't have just crazy amounts of support, absolutely, that's a great looking HVA trade. So great. Let's go back. I may have, let me see if I have an S&P. Um, I may have a market flow chart built for the S&P. Let me see. I do. So let's do this. Let's see if we can find an HVA trade together. So we have to look for a no triggers through termination, and that happened at about 9:45. So we'll just use the market flow chart at 9:45. You need the small chart too, but let's see what it said at 9:45. Market flow chart takes a minute sometimes. Um, Not so much off of support there. And HVAs don't happen all the time, guys. That's something that you have to remember too, is HVA trades don't happen all the time. Let's see what it looked like at 8:30, right when news was hitting. John, you got one 945 on the NASDAQ. Thank you for that. Not an HVA trade. Not what we're looking for. But see how the triggers rolled? That's what we're looking for right now. If you just look at market, well, that's what we're doing. We're trying to line it up off of a termination. We had one at 8:30 where it pulled off, but it didn't give a market flow trade. Um, but right here off the bottom, this was news, D-Rock. A pullback to this line off the termination, that's your look right there. That's the good one. So it helps you with the patience a lot. It really does. It helps you with the patience. Because again, triggers are corrections, right? And when you have those corrections, it's a little easier. Paul, weak trigger one didn't work. After support holds, everything is green again, going the direction of the trade. And you get in after the up bar and take it up to resistance. I like that, Paul. When it's not perfect, right? When it's not perfect, and Paul, this would have been an appropriate one as well, with everything still going up. That snap back to the small triggers right at the mid band, because the small triggers are rolling. And then yours is even just a little more conservative, which I like, and you're able to get in and get it back. Nicely done, Paul. Way to keep your head in the game. And then Farrakh, odds favorable. Taking it with three divergences, right? You understand the problems. By the time the third divergence printed, the small triggers are through. You take a shot, perfect window. And then when you get a fourth divergence, you jump ship. Nice job. Guys, you can still make money in bad situations with odds favorable momentum. Sometimes. Nice job, Farrakh. Really well done. And then E. Webster, not a trend trade, but a little redemption. You went short into support, didn't work against triggers. Am I reading that right? I see a short trade. And where was your entry? Just along? So the triggers are up, they're above the areas. You went long on the correct side. It looks like there is, that looks like an exit. That was your first. So you went long, there it is. Yeah, that's hard to see because it's on the blue fib. So you said, let's see, termination, all triggers below, support, small triggers against, and you said, holy smokes, I hope that this fib holds better than that one did. I like it. And then that one worked out for you. Loss of momentum, pull back to the fib, pointing up. Big gap to the triggers, and you just took a shot at it. And I think that was a pretty calculated shot, E. Webster. You had the gap theory in effect off the fibs. You had multiple areas of fibs. Your large triggers were still up. Your small triggers hadn't got detrimental. And the only thing that I think I could add, just maybe as a little help here, is which fib is it going to be, right? Is it going to be this fib or this fib? What if you waited for a reversal bar off the area? Something to think about. Maybe study it as you go through it. Waiting for that reversal bar, that little bit of confirmation for entry, it keeps you from having to guess which fib. And it establishes your risk. Does that make sense? I think it's a good chart read. I don't see Gene in here. Oh, E. Webster or Eugene? That's your brother. Yeah, John Novak's my brother. We all have those, don't we? Ugh. And then here's that continuation trade again. Isn't that beautiful? When the trend trade fails and resistance holds, let the small triggers turn and take the push. Guys, let me put that picture in the room for you. For you guys that love the trend trade, the rules are met. Paul, you did it. I had one earlier. John's had a couple. There's that picture for the continuation trade. When everything says down, let all your triggers agree and look for the shot. Nice job. And then let me open the picture that I just put in there. I thought I had another picture in here. Dave 888. Here was the HVA this morning. You took the first one for almost 3 points, but it rolls. I think you were asking for an example pick. Absolutely. Triggers up. HVA right at the triggers. Um, with direction, with momentum. I don't know what your other charts look like, but yeah. D-Rock, do you see it? See how all those triggers are right at that green line? And it means that you have to wait a little bit, right? Thank you for that, Dave. So D-Rock, is it still high probability trend trade? I've only got one recipe for a high probability trend trade. And that's momentum, a clear path, in an entry area, right? Momentum, a clear path, in an entry area. That's my only recipe. And I try not to deviate from that. I try to let that be what it is. So this one isn't momentum. It's not the best. It is a clear path. This is just kind of a little, it's more of a chart read. And I couldn't tell you what the percentage of wins is on it because it's still weak triggers, right? On the large chart. And it's still multiple divergences on the small chart. It's just, it's going with that overall trend and giving yourself the best chance. It's not guaranteed to work. Um, So I wouldn't call it high probability, but I think it's something to watch. If you go back and you start scrolling through trades, through like perfect trend trades that didn't work, and let's see, Paul had a great one in here. Beautiful trend trade didn't work, right? The areas fell behind. See how the small triggers come up, get in the direction of the trade, and you take that little snapback right to them and an area supports it. It's just a shot to because the large chart set up, the large chart said more up. The area was likely to hold, right? It's just that the divergences gave you that ugly little push, and you can look for another way to capitalize on it. FYI, we anticipate finishing our indicator upgrade today. Once we get it tested out ASAP with a few people, please check the resource page for update info and files if you want to upgrade over the weekend. John will make a video for it and written directions for you men. If those of you men would read them, it will be good. You won't need tech support to upgrade if we did it right. And I'll tell you what, if you know my brother, he does it right. So awesome, guys. New software this weekend. How cool is that? No need to do all the cleanouts. I have had the distinct pleasure of watching my brother trade it for the last couple weeks, and man, it is clean. It is such a good look, and his fibs are awesome, and I'm stoked. I'm excited. I can't wait. And of course, I absolutely nuked my NinjaTrader 8 this morning, so I had to do it full tilt. Yeah, he'll make it so you can't miss it, D-Rock. There's no doubt in my mind about that. A lot of great lessons today, I think, right? A lot of great lessons, a lot of great opportunities. Do you guys notice how the divergences are descending? Let's talk about a great look here because Farak, you took this short, right? 50-50, odds favorable, absolutely beautiful. And guys, notice that it is three divergences in the same location. I want to talk about this look because this is going to be a next step for you guys. Remember that you're going to learn your rules, and that blanket rule keeps you safe and keeps you happy. And that KISS plan keeps you focused on optimization, your best chance of success. When a termination creates a reversal and gives this level of momentum, small triggers smashing through, beautiful momentum. Guys, I've got three divergences, but do you notice that they're descending? I'm not getting that higher. I'm not getting that higher divergence. And the other thing is, Farak, I don't know if you recognize this, you still have odds favorable momentum on that small chart. So you didn't get the weekend triggers. You still have odds favorable momentum. You still have the tiniest little window of opportunity, right? If you're going to take a shot, Farak took the absolute best shot. And then you can use that as a management point, and that's exactly what you did. I love it. I think you did amazing on that one, but I wanted everyone else to see how that odds favorable momentum, how that descending lent itself to help out that best of the best trigger look. And guys, we started class saying that this is the look that breaks areas. This is the look that fixes mistakes. This is the look that really gives you the best advantage. I think it's been proven time and time again today. I think that momentum look has created an awful lot of success in this room today. And I think that that momentum look has broken through areas. And I think that momentum look has done all these different things. And C-Dub, that's why you did it, that momentum. And here we go right here, right? Odds favorable. Smalls have smashed, larger almost through. There's your reversal bar. Is anybody developing a window of opportunity from the highest point of resistance to the lowest point of resistance? And are you also talking to yourself, well, my large chart has 3, 4 areas that aren't broken. My large chart doesn't have a clear path. My large chart isn't really coming from a good top. It didn't happen at a fib. My triggers got above it. So am I putting conditions on the entry? Am I activating my limit order, but saying to myself, if divergence prints, maybe I'll wait for confirmation? Some of you are, some of you aren't. John Novak says, when I've got momentum and everything says down and a pull back to resistance, I'm taking it. I'm going to get paid on this trade. This is my trade. Smalls aren't way outside, but they're not nestled inside. That's not anything can happen. The path is unbelievably clear. And guys, the great part of this one is it pulls back to resistance with every trigger below it. Pulls back to resistance with every trigger below it. And John, I'm guessing you didn't get in on the way up. You made sure that resistance held. And as it started to go down, you were able to take your entry. Take half off at the trouble spot because momentum isn't great. You did take it on the way up. You used the one-to-ones. Okay. So John used a market flow chart and he said, "Pshaw, resistance everywhere in a high volume area line with odds favorable momentum. Wild horses couldn't keep me out of that trade." And if he wanted to wait for confirmation, he got it. Nice trade, John. Clearly, you have been paying attention in my class. Nice job. And then, Paul, you say with the 50-50, you want the top of the window. What if no divergence prints? Does that change your scenario? It does not. Perfect. Paul has a set of rules that he's not willing to deviate from. No divergence printed. Bolt load of momentum. Let's do it. Let's put one just below the lowest point. And let's add on to our position if it comes up to the higher point. What do you think? All right, we're in one. Stops where the market shouldn't go. Ooh, it just paused, didn't it? So we were in at 85. I'm going to sell one contract at 75. And then the second contract at 65. Stops where the market shouldn't go. Not a high probability trend trade. Paul says top of the window or nothing. Pretty, woo, and it spiked up. One, two, three, four areas I'm hoping breaks. Do you guys see that? I'm hoping momentum carries me through four areas. I'm hoping momentum carries me through four areas without a good top. Not a high probability trend trade. Not the best of the best. Not at all. One, two, three, four, and a divergence low. If it gets any higher than here, I don't want it. No, thank you. But with all that momentum, we'll see what happens. Do you guys see how we're talking through it? Is it the best trade? Absolutely not. What does that mean? That means that I've got to manage assertively. It means that I've got to be aggressive. It means that I'm not going to sit here and hope and wish and want and wait. I'm not going to put all the risk on it because I know that I'm already on the wrong side of things, right? Not going to let it come all the way up here. And I'm just kind of hoping. One, two, three, four areas that are not broken. Four areas that we're hoping that momentum breaks. Not from a good top. We'll see what happens. From 88 to 78 is $100. I don't feel good about this one because it's not a termination that created a full reversal. It is not a no triggers through termination that creates the full reversal, David. And that's the recipe always for a good top. That is always, without question, the recipe. Is we want to see, for the brand new user, we want to see that decision-making point reverse the market. We want to see that decision-making point reverse the market. I don't want it to be, and I've got pictures of it. Hold on. I don't want them to have made it past the decision-making point and then start pushing down. I don't want them to make it a little bit through the decision-making point and then push up. Because what it means is that the buyers may not be done. The sellers may not be done, right? So I'm taking away a huge advantage by this not coming from a decision-making point. Does that make sense, David? So for me, it doesn't. All right, let's do this. Is that your reversal bar? There we go. Let's reduce risk a little bit. The divergence is not a top. That's what I needed to hear you say. What is divergence, David? Divergence means, and let me take a picture. We'll just go through the picture. What divergence means, thank you for asking that. This divergence right here means that the buyers were in control, and right at that key point in the market, 74.23, the sellers stole their momentum. And it happens about the third bar, and that's what creates this line. Does that make sense? And this divergence can be a top. That's okay. The divergence can create a reversal, but this magenta line, did it reach it? Did price reach the divergence line? Not quite. It didn't. So it wasn't a termination condition. Price never reached it. And one of the things about divergence lines is divergence lines are exact numbers. They're 100% lines in the sand. Fibs are made from areas, so if it goes a tick above or tick below, that's cool. But these divergence lines are concrete. That number is the number. So what we got was a divergence line, a loss of momentum. The only way this becomes a termination is if price retests it and the triggers remain below, and then I have a termination that creates a full reversal. Does that make sense? And if you look at, yeah, so here's a good picture too, right? There's a pivot with a loss of momentum, and that's when it becomes a termination. Make sense? Cool. And then John Novak's going to throw advanced stuff in there for you, ways to think about it. And I'm just going to jump ship on this one. Um, On the NASDAQ, even on a small chart, divergence from 1 to 1 sucks. This is more of a management thing on the small chart, guys. This isn't when we're talking about good tops and bottoms. So David, always remember that divergence is a loss of momentum. When it reaches divergence, it creates that pivot stop out. And there it is down here. Uh, Here's your loss of momentum. When price reaches it and the triggers can't break, that's when that divergence line becomes a termination condition. So we're kind of seeing it right here, guys. Without a good top, this market is less likely to break that area because it's not coming from one of those key areas. With 4 areas to break, it's less likely to break 4 areas because it's not coming from one of those key decision areas. So if you took a shot at it from the high point or the low point, you're not going to sit and hope forever, right? Because if you go back to the KISS plan, and this is, I guess, what we're going to end it on today. If you go back to the KISS plan, two of the biggest things, and probably the most important for me on a 50-50, absolutely, it's not a termination, right, D-Rock? It's just a loss of momentum. There was no yeah, this happened all the way over here, right? That one's good. And then we never got to reach it again. The buyers never even made it back up, and the sellers pushed because the buyers never got to their key area. The buyers never got to where they were going. Shoot, they may want to get all the way up here to 64.99. They may not. The sellers may not let them. But they never finish their business. They never reach their decision-making point. Does that make sense? And it doesn't mean that they're guaranteed to continue up, but it means that if they didn't get to a key number, if they didn't get to where they wanted to be, doesn't it make sense that they may put up a pretty good fight, right? Are you saying if price reaches it, D-Rock? Let's use the language. If price reaches that area, that's it. But here's the big difference, and this is the thing. So you guys remember fibs. We'll call it a week. How fibs are made. Fibs are made by your software going back and taking thousands and thousands of calculations on every swing in the market, every up, every down, and it creates all of these areas, guys. These are all of the Fibonacci retracements and projections that are created when you open your software. Your software, the algorithm goes through, my brother's brilliance comes into play, and it calculates which are the most important, which are most likely to hold, where's the highest concentration. And from all of this, you get these key Fibonacci areas. So if I'm a tick or two off on these, no worries, right? I'm considerate. That's horseshoes and hand grenades for me, because they're made from so many calculations. And then the flip side, and I made this for someone a long time ago, and I love this picture. These divergence highs and these divergence lows. Guys, these represent a specific price, a to-the-tick price, where the sellers stole from the buyers or the buyers stole from the sellers. It is a clear as day line in the sand, 100%, has nothing to do with the areas, is 100%. Where did they lose it? They lost it at 74.23. Exactly. That's where the tides changed. So that's the beginning. That's the sellers saying, buyers, go to hell. I don't want you to go up anymore. You saw it in the momentum and stuff like that. But because the buyers never made that area, they never made it to the next fib. They never made it to the 1-to-1s. They never made it to a key decision-making point. The only thing that I'm looking at is where the sellers decided they wanted to push. For whatever reason, it doesn't matter. So no decisions were made here by the buyers to give up the fight. No decisions were made here. The sellers just simply took it from them. So what that does is it creates this very specific line in the sand. And if the buyers come back to it, the sellers have already told them, this is my electric fence. This is my line in the sand. This is where if you decide to come in, and give it a shot, if you decide to come in and try to break that area, man, we may unload on you. We might let you think you have it, and then we're going to unload on you potentially right at that key area. Electric fence. Because, it's a number, it's a line in the sand. So it's a key price where failure has already happened. Does that make sense, everybody? Hey, thanks, Farak. And then it doesn't mean that it won't continue down, but it means with this much trouble, this much support, the buyers might give it a good shove. And then they did. And then if it is going to continue down, maybe we get that snapback to the small triggers right there. D-Rock, do you see it? There's your potential continuation if that market is going to continue down. The large chart still suggests down. The smalls haven't gotten above. Your small triggers are down now, right? We made it through the fluff, not guaranteeing a winner, not a trend trade anymore. More of a continuation if it's going to go down. See how Johns were still down there? Just to clarify. So great lesson on what it means to have a pivot stop out as a termination, guys. It's not the actual magenta line, it's the price reaching the magenta line and then it failing from that line. That's what creates a strong top. And guys, you are smack dab in the middle of a decision-making spot right here. Small triggers are going the wrong way. You don't have odds favorable momentum. Large triggers are going down. Small triggers are going up. Smalls are above the large. It's not pretty. Nothing agrees. And there's a lot more money than trend trades. But once you get that trend trade down, guys, you can grow from it. And that's it for me. What an outstanding week you guys gave us. Thank you for that.